Good morning, May 31st, final day of trading in May. We're going to be looking at technical analysis, looking at the SPY, trading futures, options, stocks, watching barbecue, BBYQ, GME. Top might be a runner, arrival. Have to wait and see what data brings. Sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at HappyMoneyYT and our Discord server. Free to join. There's our Twitter I tweeted out this morning. Link for the video. And I'll put the link for Discord in chat. Thank you guys for joining. Good morning. Morning, Andrea. Good morning, Buzzin. Happy Money morning. The money. Hey, Ace. Hey, Isaac. Morning, Dennis. Morning, Joshua. Morning, Passing Cloud. And the SPY kind of gapped down a little bit. I keep doing this where I want to get exposure for overnight, but I wait too long. Seems like once the market closes at 7 or 8 or whatever it is, then the futures kind of take control and make the move happen pretty quick. So I wanted to go short and it would have worked nicely, but I missed my entry. Oh well, we'll trade it today. I do have a little head and shoulders here on the hourly, as you can see, but gotta be careful because there's also a little inverse right here. Head, shoulder, shoulder. On the daily, though, we do kind of have this RSI divergence. So I think we are beginning to descend. We'll probably be looking for entries today. And bounces to the short side. Levels in here. Opening below yesterday's low. Pretty big vacuum there from 418 down to 415. The arrival's up 5% of that $4. Did barely get stopped out yesterday. Maybe we should give it a little more room. I don't know. Chart still looks very nice. And the trade. Yeah, there's deadlines tomorrow, so not sure how soon we'll get news on that, but yeah, deadlines are tomorrow. Thank you guys for your pre-market likes. Well done. Seven of you liked it. Appreciate it. Did get into calls on GME before this break. And they're not up much. But maybe GME's about to wake up and go crazy. Been kind of waiting for GME to wake back up. IP's holding up nice. Did we get much this morning? Chicago Business Barometer. Job openings is at 10. Harker speaks at 1:30. Jefferson also, and then the Beige Book at 2. Got some Canadian data though. Canada's economy expands 3.1% in first quarter, beats 2.5% estimate. U.S. home prices will decline less than previously expected this year before stagnating in 2024. According to property analysts polled by Reuters. What free market stuff he's got going on? Pharmaceuticals. Dana. Top's not on my list though. Where's Top? Minutes. I'm showing barbecue is flat on the open. Might be looking for some shares if we get another move on the 2340. It bounces there, shows support. See if we continue to build sort of cup here. Okay, minute and a half. Working, that is working. Do you like the bell? Homoing gains back into Bobby. Back into the barbecue? Order 29 cents. Yeah, you should get filled for that. I think we're trading at like 25 cents. I'm not sure about the hearing. If you guys have a link for it, please share it on Discord. We'll listen to it. Last one was pretty interesting. I had the tab up, but I've closed it since then. It's been a while. If I can find it real quick. Alright, there's the bell you didn't hear. And in two. Yeah, if you could send it to the Discord, put it on media, or just DM it to me. We'll throw it up. Yeah, barbecue's opening at 26 cents. SPY's opening up down 0.5%. I do think we probably retest this 2340 this morning, or today at least, on barbecue. More yesterday's lows, that's what I'm thinking. Ding ding ding, there, you heard it. Like natural gas is up a bit. Arrivals up 4%. Up. Up. See if we get a rejection of yesterday's low. SPY. Barbecue's up 1%. Loop TV's up. FFIE. That gas rivals at $4.05. GME is plus 0.90. LPTV was the go. I picked up some Loop TV. This is the Zip Trader call out. Might be late on it. I've traded this one before though. We'll see. Already getting a little head and shoulders up there on the 1 minute. At the resistance. Might be this short, literally right there. Barbecue plus 1.6. Loop TV's up 10 now. Big wick there out of open on suspension talk. When companies go through corporate restructure, usually they're suspended. Not unusual. It's not unusual to be loved by anyone. Kind of like that. Two and a half on barbecue. GME's down almost 1%. Let's see, loop 7.4. Thing's pretty illiquid. 27 million free float. Not the biggest of floats. Buy's looking pretty weak out of the gate. Really wicked up to yesterday's high, and that was it. Created a little head and shoulders on the 1 minute. So might be breaking the pre-market low here pretty soon. Is back under 400. Feel it good. Nvidia's down 1%. AI's down 10. Loop TV, 12% there. SoFi's up 6. Barbecue just flat, so yeah, see what happens today. But seeming like a cup is being built here, or at least some time of consolidation, similar to this week after we had that rip and then a little sell off of sorts and then flat. So I think that might be kind of repeating. Firm's up 3.5. XXII is up 4%. He's now green. Earn 4.5% on that. That's had a nice rally. Barbecue pretty much flat. Yeah, GME is looking good. 24.67. Flat out of the open, but holding up the gains it's had. SoFi 8.3%. I was kind of coming up here a bit. See if it makes a new high on the day, and if we kind of get a higher test from yesterday, closer to 420 maybe. I guess we do have a gap too, huh? We have that gap up there. Barbecues. The daily SR in barbecue was like 50. What do we hit? We hit 55. That's basically in the middle, Joshua. You like it a little oversold. Make everyone feel like it's a good deal. Good. Arrival, what are you doing? 4.5% on Arrival. Open doors up 3. And the sauna's up here. I bought a little bit yesterday. I might buy some today. See if it holds this support again. It's down 5.3% to get a little flush there on barbecue. 24.20. So I think it'll hold there, but don't know yet. Don't know yet. And then essentially making another formation like we saw sort of here or here. But we've got a lot of news catalysts. I think that will affect the stock. I think we'll know about it in the next couple of weeks, so charting might not matter a whole lot when the news comes out. Ah, because you have a trigger for your RSI to exit. I see. That's why you don't like that high RSI. Got it. No, I get you. Top's down 5%. See if I still like this thing. I do. I liked it yesterday just when it popped over VWAP. Thought it was gonna start exploding. Don't like it as much now. Now that's seeming normal and consolidating. I'll hold that one. SPY's moving up here a bit. It does have that gap. GME 0.5%. SoFi's up 8. Barbecue down 3. Need to keep an eye on top. I don't want that thing to just run away on me. I'm moving up. Yeah, it's I think it's running quite a bit different. Spray bottle. It's running different on OTC, so I mean we might get big moves, but SPY's ripping there. So filling the gap. Barbecue 2450 down 4.2%. See if it's making a little head and shoulders here. 1 minute. I don't want to stop loss on top, but I don't want to have to look at it. Maybe close it. I mean, I really just got into it for that yesterday. Break a VWAP with volume, it didn't really pan out. Oh, there you go. A little flush on the SPY. The VWAP. Still hasn't finished filling that gap. Be patient on this thing. I think I'll wait for a higher. It wants to fill that gap. Both eyes are moving, 10.5. GME's up 0.5%. IP is flat. Only pretty aggressive uptrend though, I like that. Goes down 1.5. If this RSI divergence continues. Not looking very good for it though. Hopefully a little pre-earnings run up. Wall's down 2%. Back West is down 2. Barbecue, a little bounce there. Oh, the AI. Down 7%. How am I not up on these plays? All credit spread. Oh, because this one's in the money. God, I did one in the money. What's top doing? Top's down 6. LPTV is up 8.5 still. Firm's up 5. SMX. Uh-oh. This says 3 days from the hearing, Barbecue will publish the 4.5 beneficial shareholders. Barbecue 2380, down 7%. Let me see if it finds support from yesterday. $23.50 on Barbecue, that's 8% down. 23.50. Getting closer to the level from yesterday. 2333. 8.8%. I haven't filled the gap, but it's looking pretty weak. Maybe it fills it later today. SoFi is really moving, 13% there. Catalyst on here. I don't even see any catalyst for SoFi. Does anybody know? Usual call option? Nothing. Rip City. GME hanging out 24, up 0.5%. Barbecue bouncing on that level there, not bad. Not bad. I think we can be patient with it because momentum's still to the downside. It's just finding a floor, I think, now. So if it starts to trade in a channel, then you'll know. I need to see it start to make double bottoms or higher lows. Oh, just student loan debt agreement, the debt deal. Of course there is. Good call, Frank. Eyes coming down a little bit. Still kind of dancing around. Support. There's your bounce on barbecue. Good first sign of support. Right back up to VWAP, 25.25. Down 1.29. Okay, there's your flush. with the volume. Just dump this top. I guess it's holding yesterday's level. Barbecue consolidating above that 2340. If that continues to hold today. I'm looking for the link. Yeah, sure, it's today. I wick down there, but it's fighting it. Cut off.
What you became.
Dude. What in the world? All of the Reddit posts have audio now. I mute one, it doesn't mute all of them. You mean delisted? What do you mean? It's already been delisted. It's on OTC. I already actually have calls for GME earnings. I don't think I'll get more, and I'm not sure I'll hold through earnings. I want to see what the markets are, see what the expectations are. The analysts, because they probably pump the expectations just based on the last one now. So it'd be a harder goal to reach. He's down a little bit, 24.37, down 0.8. SoFi still up 10. TV's holding 8%. Too low there on SPY. GME down 1.2. We're gonna get a market bounce here sometime during the day and get a gap fill still. So what's red now will probably be green later. Some stuff at least. Yeah, barbecue, barcoding around 23.40, 24.92 or so. SPY is still kind of flushing here. Let's see. Top. Yeah, I want top to hold this level. The top, that's all you get. That's a max 5.8%. Trying to avoid a repeat. Yeah, market makers definitely price in so they make money. Morning, Adam. Not sure where SPY's gonna find support here. Maybe this kind of bull flag from the other day. SPY just still melting down here. Morning, DIY. GME is ready to rally. Just waiting on SPY. Flush out all these morning cobwebs. I've had an odd tick up in people following me on Reddit. Are they bots? Does that happen to you guys? I don't like post on Reddit much at all. Usually just comments. Yeah, I don't know if I've ever made a post on Reddit. Always comments. But I haven't even been commenting. I haven't been looking at it. Are you getting like an influx of bots on Reddit? Kind of weird. Hold SPY for 20 put. Hope to flip long. 412. 2 days. Yeah, we have that RSI divergence. If you're doing kind of a longer term, or I guess a little swing trade. Or 12, huh? Market's just melting. It's melting. Barbecue. Jumbo VWAP, 25 cents, down 2.27. Not in a rush to buy anymore, but we start to break out to the upside, I'll probably pick some up. Or if we, I'll probably dabble a little bit around this level today. Just small scales around 23.40. And be patient. If we break that, wouldn't be great, but uptrend's still intact on the longer time frame. If we start to kind of form this cup, this 23.40 for the bottom, maybe a little double top at 32 and then handle. Still melting. This is what my bull flag level from the other day. Not a very strong support. Like I was saying, there's not a whole lot after that 418 drop. We've been kind of in this vacuum. 415, like I guess that 417.13 might hold. New lows, new flushy. Bigger flush there on SPY. Me getting a little bit of the feel. $24.27 on GME. You're gonna make me do it, aren't you? Okay, SPY might be bottoming out here. Barbecue 2470 47 3.4. Talking about the debt ceiling right now. Let's see. Meta, Amazon, and Google have all drastically reduced the size of their teams focused on internet trust and safety, as well as ethics, as the companies focus on cost cuts. Binance lays off a portion of its workforce. U.S. rate futures price in 71% chance of June rate hike after JOLTS data, versus roughly more than 60% late Tuesday. Interesting, yeah. We had what, JOLTS with jobs data this morning? Didn't even look at it. Probably part of the reason for the sell-off. Muriel Rubini has said that markets are wrong to think the Fed is about to cut interest rates. Elon Musk scheduled to visit Shanghai plant on Wednesday night. Tops holding up. LPTV, kind of a new little high there. Or no, I guess it retested that high. Yeah, we had Joel's jobs data this morning. Americans need an average post-tax income of $68,499 to live comfortably in the U.S. Job openings 10.103 million in April. March was 9.745 million. About 35% of consumers said they were at least considering using a buy now, pay later loan last month. Yikes. Buys still melting off. Well, bigger flush there on less buy. The vacuum worked. Closed my shorts too early. Got excited. I mean, he's holding up well. Ready for a bounce on SPY. LPTV 36.49 plus 12.6%. SoFi still up 8.5. There. 420 grows will melt your face. Does that mean we're gonna rip back up to 420? Or just continual rejection on 420? Hey Bruce, Zella making moves again? Certainly is, 12.5%. Rejection. Yeah. Chart's starting to look a little better. Has a hard time getting above that 50 moving average, doesn't it? Need really a bigger move to confirm that's out of this downtrend here. No. 700 shares. Well, CXAI is up 15. AI still down 10. So if bearish plays on AI, they're like break even. I don't know. I guess because they're spreads. And they are out of the money a little bit. I kind of consolidating down here. Pretty weak. The XAI is running 20%. Wow. Yeah, this thing had a crazy end of day yesterday. Loop TV starting to go a bit. It's up 14.5. Gonna wait before going long here on SPY. Morning, Julian. Not a whole lot. It's starting to consolidate. Maybe building a cup. I know what we're looking out for. For maybe this 2340 level still. to be the bottom of the cup. Unless we make new lows today, then we wicked down there yesterday, but really the level was closer to up here where these candle bodies are. But yeah, we have catalyst coming up, so shares of major US banks fall on broad market sell-off. Unrealized losses on securities fell 16.5% in Q1 2023 to 515 billion. Cost an average of $35,647 per year to raise a single child in San Francisco, making it the most expensive place in the US to start a family. Lincoln says Chinese pilot took dangerous action in approaching US plane in South China Sea. Barbecue, it's back to VWAP. 25 cents, down 2.27. SPY still kind of melting down here. A little fleshy. Barbecue right above VWAP now. Might have been the double bottom we got there. We'll see though. You thought that yesterday too. You get the double bottom and then went for the retest and blip. ACs. This is down 3.2. What's going on, Macy's? Earnings? Little pre-earnings sell-off. Look at the price of this thing. morning, Keenan. 21 today. I was thinking when are we gonna hear it? I'm not thinking so. I was kind of, this was kind of the level I was thinking. I've been thinking even since we're up here. This is kind of that solid support. So, I'll be picking up more around this range, but I don't think there's too much of a rush. I mean, we'll see. If it starts to rip, then yeah, you could chase it. But if you're looking for kind of the bottom, potentially a dip buy, and I think this is probably it. We double bottomed here yesterday and hit it again today. It's still divisible by 7. I hope you're serious. I truly hope you're serious. Well, yeah, let's set your buy alert and just party on, Wayne. You can just, that's the easiest way to trade stocks. Like, if it gets this price, I buy it, because that's it. That's my level. This is divisible by 7. Yeah, you could wait for 28. I mean, by 28, you would know that we're in an uptrend. You're a little late, but not, not bad. That's serious. That's awesome. I'd set targets for both 21 and 28. I think that's awesome. I mean, you might get a lucky fill at 20, just like 21 even. Yeah, you might get a lucky fill there today. I mean, it's possible this level breaks again. I think 28 you would definitely get a fill. Oh shoot, I missed my top exit. Yeah, I'm closing top. Okay, I cut top. Took a little loss on it. Still holding LPTV though. Not bad, 14.5. Went long there on futures. Got a little inverse head and shoulders built here. We're at a support. Not the one I was thinking of, but yeah, we'll see. Be careful, it could just chop around here for a bit. VWAP is actually quite low. My phone's counting. Yeah, phone. Might be a bit early on this, we'll see. Yeah. GME 2441, 1.6. The XAI is still going. Oh my goodness, 32%. What in the world? Crazy. AP down 3. Kind of made a double top up here. See though, it's still in this channel. See if it breaks down below this. If it doesn't, just like some consolidating. Still has that gap at 23.75 to fill. Barbecue below VWAP there. Quantumscape down 1%. Upstart down 6.3. It's been quite the uptrend though. Right. Nirvana made an RSI divergence there on the daily. Bolt's doing Twitter Spaces. 71% of men are working full time. In 1980, the number was 85%. We could listen to a little Pulte. I still want to hear the hearing. Is that today? Yeah, sure, that's today. And a nice uptrend NRGV. Like their options though. No liquidity. Yes, Groupon. Should we try it again? Did it fill the gap? It did fill the gap. There's a little bounce on SPY.
The ego on you.
Ego on you. Ace, thanks for the gifted membership. Appreciate it. Josh, you've been gifted a membership. Congratulations. Make your way to the center stage of chat. Thank Papa Ace. Josh, you've been called. I think I won't do the Groupon trade anymore. I see Carvana. Oh, I didn't like that one. Oh, rejection candle there. On less buy. Bubo looks like a nice short for this gap fill now. Edu. Flow is under $1. Ooh, I like run. Kind of. Like this downtrend it's been stuck in, but sorry. Get the options on run here.
You just
I know, but
ignore
I'm
it.
saying
It
this
doesn't
is
exist.
what well, this is what, in my opinion, is the you know the the tribal nature of this stock versus that stock. What happened to us being a tribe of apes trying to affect change against people who want everybody to be fighting?
Right. To your point, Bill, I could relate the charity work you're doing to kind of what we got going on here, right? Like we saw Apes for Change; they were doing their thing. I completely lost my point right now. The
No,
charitable work you're doing.
it's extremely relevant. I mean, I've had charitable organizations, right? Literally
Oh,
charity, which is helping
this is
people.
where I wanted to go with it.
But hold
This
on,
is
let me
where I wanted
finish
to
the
go with
point.
it. Go ahead. Yeah.
Let me finish the point. I've had literally charity organizations work with these other people to come up with hit pieces on how we're doing it. And it's hilarious to see them come up with it. They say, oh, $10,000 for somebody who needs a new van isn't enough. Well, yes, it is in many cases. Like this paralyzed lady whose van we crowd fundraised for. She had a tornado hit her van, and we found her a van that was $10,000. And people went nuts saying, oh, $10,000 van isn't enough. Well, it was a nicer van than she had before, and it didn't get blown away in the tornado. It was a new van for this lady. So I'm just saying, the world is filled with naysayers. It's filled with haters. And, I think that we have something that's great. I think that this movement, whether it's you all, whether it's
Oh, I didn't realize I was
GME, whether
muted.
it's Bed
I
Bath
was
and
laughing at this
Beyond,
guy.
is a movement of love from what I've seen. But to the extent that there is this hatred or whatever, that's just going to be like an anchor, in my opinion, and it's just going to weigh down with friction how quick change is able to be effected. I mean, this whole thing about DRS, I understand that a lot of AMC people don't like DRS or think it's
Didn't realize I
horseshit
was
or
muted.
whatever. Well, from my
I was laughing.
perspective of having been inside of the board inside of a boardroom,
I've
in my
never heard
opinion,
Pulte, I don't think.
the whole fact that you have one company, which is CompuShare,
He sounds
which
older than he looks.
basically has the keys to the kingdom for all who owns all of the stock, and it's not transparently publicly available.
I put up a poll. If you want to listen to this, come vote.
Even if you think DRS is some conspiracy,
and while you're there, hit the thumbs up.
That holds no weight. There's at least something to the fact of, hey, how do we get this to be a more transparent system? So it's like, I don't know, I mean, call me hopelessly naive, but it's worked out well with me with Twitter philanthropy to lead with love. And if people want to hate, they can keep on hating. But, from my perspective, it's just an anchor that's going to weigh down effectuating change.
Well, thanks. All right, I'm gonna step down here. What I wanted to tie it to earlier, before Bill, when we kind of pulled the hood up here, right? We found that there's money going missing from pension funds, right? People who aren't involved in the market are being affected by things that are taking place within the market plumbing, right? And so, I think everybody needs to get this knowledge.
Pretend to be Trump.
Know how what's going on with their money. Anyway, I'm going to step down here. I urge you into looking into the issuance of APE.
His interested in AMC is
genius move
I
by
will.
Adam.
I don't fully understand it, but that's because I haven't been properly educated
Bill,
on it yet.
Bill.
But I intend on getting smarter on it.
Thank you for the
Bill,
time,
if you
guys.
can just hang out just a couple of more speakers, I got to get this next guy up here who just came in the room. He will lay the foundation down for APE. Nachi, take a deep breath, buddy. I'm going to give you the mic.
Yeah.
And
why is
First of all, Bill, I'm not
Yeah,
sure.
it looks like I've blocked it. It's like I've
Yeah,
what did you do to get blocked?
I made a stupid comment, and I want to apologize. It was way back early in my Twitter career. I made some mistakes, as we all do.
I don't care. What did you say? I don't care.
I don't know.
mean,
So
to be honest with you, I'm not even the one who's doing a lot of the blocking these days.
We're from similar areas in terms of background, and my father was in the window business, dealt with Pulte for many years. I think I made some stupid off-base comment about whether you got started with more money than somebody else in entrepreneurial spirit. So please forgive me for that.
Yeah, well, I just unblocked you, and I don't care.
Please forgive me
Call
for
me.
that, because I appreciate
No,
who
no,
you are.
it's fine. I actually like when people call me a trust fund baby, and when they say Lucky
I didn't
Sprinkle,
call you
because
that. I didn't call you that.
no, I know,
But
but that's
And
where I
why are they
come
just
from.
talking ape? Like ape? Are they
To
talking about
me,
ape
it's
the
like, okay,
ticker?
underestimate me. Think
Like
I'm a
explain
complete
ape?
idiot. Think I'm a complete fool. I mean, so I just unblocked you.
But since then,
No
with my
harm, no foul.
father, who's known your father and grandfather a long time in the business in the area and in California, a lot around building, my dad is one who gives you a lot of respect in your family. So,
See what happens with the spy
anyways,
here.
block or no block, thank you for unblocking me, and I really do
If I turn
appreciate
this
who you are and what
down,
you're about, because you know,
so loud in
being
my
able to
ears.
change what you've done in terms of the way we give to people is paramount, because when you have organizations that use philanthropy for selling product or more revenue in a way that's just not direct to the people, whether it's a $10,000 van or a $20 lunch that they needed. I have 20 plus years as an executive in business. I've been around boardrooms where I saw consultants that were purposely put in place to hurt the business so that the stock price could help hedge funds out of New York or San Francisco. Really, really frustrated. And I found this community a couple years ago, and the buy button being taken away on the 28th was a big offense. But I really, Pete mentioned the ape dividend, which is August 22nd for you, sir. If you look at August 22nd, and if you got any type of
I
passion
like this
around
double bottom.
GME and the buy button and GameStop to report, I call August 22nd the greatest heist against retail investing that's ever occurred in history, because of what a preferred equity is. And you've been around business infrastructure for a very long time. So if you have common stock, and then you have a preferred equity, which is like a utility dividend, which is like a venture capital utility that's
I don't like
inside
the
the common
ape
stock,
ticker.
which really shouldn't yield too far away from its common stock, maybe 1-2%. Over 500
Oh, they don't like that
preferred
it's a
equity
different
stocks that
price.
are traded on the stock
I didn't even know
exchange,
that
they
that
don't
was a
separate
thing.
themselves from a deviation of more than 1-2%, because the yield should never fall that far away from the common. The only way that that was possible was that if you were short one AMC, you were short one ape, because you were short the yield going into the common right out of the gate in settlement. So on August 22nd, CompuShare was involved as a custodian, so was the DTCC, and the transition of the way that ape was supposed to be delivered directly to the shareholder, one for one, on that day. Over 1/3 of that dividend was not delivered to the shareholders across the world. A lot in the United Kingdom, but 2 to 3 or 4 days here in the United States. I'm a preferred and platinum member with two brokers, which means I've been with them with a long time, with a significant amount
Wait,
of
they
money
didn't
that's
get the ape
significant to them
shares?
to call me a platinum member, whatever that means. But I wasn't given platinum treatment because I was screaming about where's my dividend. And even brokers like Fidelity, who admitted that they didn't understand the distribution. So what
I
that
don't even know if
was
he's talking about
a
GME or
preferred
AMC,
equity
because
treated
everything
like a
AMC's done
split.
has been a
And so
copy
when
of
you actually
GME.
look at it,
I think
when
he's
we're
talking
talking
about the
about
ape
the notion of
dividend
selling covered
from
calls
AMC.
and the ability across something that was already over shorted on the one side that was common, was a 4-to-1 short on the ape, which is why they couldn't deliver. That's why the separation of ape got to as much as 90% of its common stock. So when you research that and do take the time of August 22nd, I think you'll find that you're as passionate as you are as giving, as passionate as you are about human
I didn't even
kindness.
know they didn't all get
You'll
their
realize
ape
that
shares.
what prime brokers were allowed to do in custodianship with CompuShare and DTCC, just in the way that this preferred equity was supposed to yield and where it belonged. I believe you'll be more passionate about this, about anything, than you ever read before, because the day before that yield was even issued, a prime broker spoofed options, which you can't have options on a utility dividend. There's nothing to divide. So Robinhood, actually, the buy button takeaway guilty party, actually spoofed options on a preferred equity, then said by the CBOE that this was a mistake. This contract should have never made it to the desk, because by default it's not something that should have options on it. But yet it was able to go through enough
Interesting.
of
I
the
had no idea.
process through friends of friends, wealthy friends of wealthy friends who said, we need to post this because we need as many of the first in AMCs to fold this day so that we can cover our obligation. And they still haven't been able to do that. So over 2 years, 5,100 hit pieces have been written on AMC. You know, in terms of the business fundamentals, the debt to income ratio that's represented, the debt. If I take Netflix, or I take some of the FANG stocks, or the 13% represented by Microsoft and by Apple now in our SPY, the numbers don't match. So if they're going to go ahead and short and distort and attack things on top of doing really slapping in the face of the retail investor, saying we can get away with this by treating a mechanism, a core infrastructure of a preferred equity, like it was a split, so that they could then take the dividend and use it against the people. So just thank you, Fuan, from Block Me. Sorry for if we ever had any, whatever happened on the Digital Trash Network stays on the Digital Trash Network. But I can tell you're a good human by your voice. My father speaks highly of the Pulte business and Pulte Homes, and I do too. So I just wanted to say thank you for giving me an ear. I've been around finance, financial audit for more than I'd like to see. And when I say follow the money, in corporate companies and consultants that actually go in to actually hurt the investor, and it usually comes down to the retail person or the pension fund, which the pension fund is the retail person just compounded together. And so when Ken Griffin said to the people, you're not hurting, Melvin Capital when Gabe Melvin went down, when it was succeeded by UBS, which is a very interesting thing for us to watch, is this UBS Credit Suisse deal, because that's where a lot of those toxic swaps go. But he's like, you're hurting the pension funds, the teachers. Do you feel good about that? When it was him and his program and his illegal action that was doing that. So it's not just the retail investor at the baseline, it's the pension funds across the globe that are being nickel and dimed and skimmed by an operation that caught itself in what we call in the industry a hookers and thieves game, where they really just hook the pennies to survive. When you print $7 trillion of the federal government and you put that into the banks at 0% prime benchmark, when you do that, banks are forced to put it to hedge funds, even not knowing who they are or their family ties are. And often those hedge funds work against the people right away to actually create rehypothecation, because it's the only place to do that. So
this guy's
thank
smart.
you for giving me an ear.
I'm sad that he's an AMC investor.
That's my pitch. I really do challenge and urge everybody.
I don't know how that even happened.
The ego on you.
To review August 22nd, because it's worse than, and in essence, the
Thanks,
buy button
Ace. Appreciate it.
taken away, because at least they just took the buy button away. On August 22nd, they just stole your money in broad daylight. So thank you again for the time. Appreciate you.
That's way too smart to be
thanks,
into
Nachi.
AMC.
Appreciate that. Hey, Bill, we obviously want to respect your time, and we try to keep these spaces to a reasonable frame. And
man,
as much as I'd love to get everybody up here to talk, we'll probably get ready to close it out here, unless if there's something.
We can keep going.
Good? Okay. All right. I got no problem with that. Yeah, let's go for a little bit longer then. Scotty, I know you've been waiting a while, my man, and then I'll get to AMC after you. So, Scotty, please jump in here, brother.
Yeah, so I just wanted to point. Mr. Pulte, thank you for your time, buddy. I'm pleased you have some interest in AMC.
They're just trying to convince them to buy it.
I don't know what causes the divide between GameStop and AMC or anything like that per se. I've been here for 2.5 years, and to Checkmate's point earlier about psyops, I definitely think psyops is involved in this whole situation. There are nefarious people, posting, trying to cause a divide. Can I pinpoint one person particularly? Not
it's
necessarily,
me.
but I do think that psyops is there. Even touching again.
There's no teams.
AMC article after article after article after article for 2.5 years, beating the company down. It's unheard of for, in my opinion, looking at what I'm seeing these days. I've not seen anybody catch the noise that AMC catches. And the last thing I wanted to say to you is, You know, if Pulte Homes had 4 million
SPY.
retail investors that were also, you know, patrons, customers of the Pulte Homes product, how would Pulte benefit? And I think that's where AMC is at right now. They have the benefit of 4 million shareholders that are retail investors that do support the product. Just briefly, you know, again, somebody else mentioned the gold mine. AMC has bought 20 some odd percent of a gold mine with the ability to take on more through warrants at a later date if they choose. But Hycroft
You're low on
started
SPY
selling
there.
these coins. And to my knowledge, all these coins that they sold were both in every instance sold out. The popcorn that was mentioned recently, that was mentioned earlier, that's in Walmart, continues to sell out. So I can't speak to how the
You're
do
low.
I think the
SPY's
market
flushing.
mechanics of are fucked up unequivocally, but I can't speak to that with truth.
Oh,
What I can tell you is that AMC has 4 million people that support the company
easy now,
wholeheartedly,
guy.
and that alone is going to see them through the other side of this, and I can't be convinced otherwise. And I hope you do some further research, and you will find that in fact we're a goddamn powerhouse to be reckoned with. Everything AMC touches,
Yeah, GME down 1.7.
everything AMC touches, this retail shareholder base gets behind 110%. And that'd be the only thing I want to express. I came here for a MOAS. I've seen what's going on, and again, in my estimation, with the corruption in the market. But unequivocally, I was a movie lover before this, and I'm going to continue to support the movies afterwards. And I wholeheartedly believe that this retail shareholder base is going to do exactly the same thing. So that was my 2 cents. Thank you for your time.
Thank you, Scotty. Appreciate it. AMC, go ahead, man. I know you've been waiting a while. I apologize. And then we'll get to Keith.
Good. Yeah, no problem. Appreciate it. Bill, thank you for taking some time to spend with us today. Couple of things. One, I found AMC back in January 2021. I found AMC because of GME.
Hey, AMC, can you just, like, if you're on like a Bluetooth or something, can you just fix your mic a little bit, man? I'm sorry, just a little bit wavy.
Okay.
Yeah,
How
perfect.
about now?
Yeah,
Is this better? Okay. I found AMC through GME, and I think you'll find that the majority of AMC shareholders have GME, and I think you'll find a big chunk of GME shareholders have AMC. This division is, in my opinion, manufactured. It is manufactured division that some people have bought into. And it's just like everything else. I mean, if you pay attention to the world at all, you can see that that is how the 1% tries to control the 99% is through that manipulation. And so if you don't buy into that, if you just don't pay attention to that, don't buy into that, don't feed that fire, so to speak, that fire burns itself out. And I think that's where we run into the GME versus AMC. I think you'll find that most people on both sides, we're apes. We're all apes. We are
Yeah,
the
well,
one.
I'm not feeding it. I mean, I'm just the recipient of it. I mean, just go
Right.
type in Pulte on Twitter
Yeah.
and see what people have said the last
I'm
2
not an
hours
ape.
towards
Oh
me.
yeah,
I mean, I haven't even said anything.
I'm a
get
human.
it. We get it. We get all of that all the time. Like I have a small little channel. There's like 20,000 people on Telegram, and it's an AMC channel, and I get hate over there. I get hate over here on Twitter. It happens all over, and it's so coordinated that it's like it has to be planned and
They're
created.
talking about me.
Like if you do a search for with AA's exorbitant salary or whatever on Twitter, you'll find hundreds of posts that are all exactly the same, trashing Adam Aaron, hundreds. And that kind of stuff just doesn't happen naturally. And every post is exactly the same. It's copy and paste.
I
If
wish
you
I
do
found
a
those to
search
copy.
on
I had to
Google
think of my own.
for forget AMC for news articles, you'll find hundreds of articles over the past couple of years that were put out. There's so much put out against AMC, it really makes you think, with what we know about how mainstream media works, with what we know about
GME's coming down pretty good.
how
2.5% down now.
these media companies work.
See if it holds in this channel.
It tells you everything you need to know. As far as the type of people the AMC apes are, I couldn't imagine my life now without the family that we have. I've got that little 20,000 family over there, and I'm going to tell you right now, after squeeze, post squeeze, we've already talked about it. We're going to turn into apes for change. Basically, we're going to take our newfound money and do good for the world, and we're so excited for that. Like, we're so excited for that change. As far as AMC being manipulated, one thing that you can look, and this would be very easy for you to look into and research, is the FTDs, failure to delivers. Those are clear indicators that something is wrong. And if you look at April, the average number of failure to delivers per day for AMC was 4.6 million shares. Average. There was 2 days. One was 17 million and one was 18 million failures to deliver. If you look at like Google.
Thanks guys for your likes. We're listening to Pulte on Twitter here. Well, not Pulte, just a bunch of AMC apes. But they're trying to convince Pulte to buy it. I guess he asked about it, and here we are. Keep an eye on the chart here for SPY. It looks like it's making a little RSI divergence. Thanks for your likes too. We're at 28 likes. Well done.
Abuse of the stock happening, and that's what we're fighting. That's what we're fighting. It is truly the 99 versus the 1%.
Hey, AMC, I don't mean to.
And we are.
Hey, AMC, I don't want to cut you off, man, but if you don't mind, just give another minute, because I know, guys, I'm sorry. I know I'm going to get some fuck you DMs for this, but it is what it is. We've got so many people, but I want to get Cat. I want to get Cat Stryker up here. She's been, one of the most viable,
very uncomfortable, that guy.
People in this entire community.
I just feel really bad for him.
Yeah, AMC, when you're finished up, please, I want to give Kat the mic
holding on to this
and let her speak
idea
with Bill,
about Mo asset.
Absolutely. So yes, we are very strong. We are united. There's no reason that the GME and AMC apes should not be united, and I think the majority already are. We're headed in the right direction. The fundamentals are no longer a question anymore. The fundamentals are great and improving every single day. As far as AA, he's making all the right moves. And there's a big amount of FUD. The anti-AMC people say that Adam Aaron wants to destroy AMC. It just makes no logical sense. So you just don't buy into that. But we're strong. We're united. We are going to win. And we'd be more than happy to have as many people come on board as possible. I appreciate your time. Thank you.
Hey, thank you, AMC. Kat, please jump on in here.
Hi. How you doing? Hi, Bill. My name's Kat. I've been in this since January 21, and I initially got in because I loved the movies and couldn't believe what was going on with the corruption. I found out and got in the fight, and I also got into GME as well. And I got a lot of pushback trying to combine the two and show, we were all together. We were the 99% against the 1%. We're all fighting the same battle. And it was a lot of hate coming towards GME coming my way, and it was insane. And we're just fighting the corruption. We're not fighting each other. This is all us together as retail coming together to it was just insanity. Anyways, I had a love for movies, and I have met Adam Aaron 3 times now.
5 minute up, RSI divergence playing out.
And he is a genuine person. He definitely cares, and I couldn't imagine him
break this kind of
going out on his last career with fucking over retail. Can you imagine that? Running a business yourself.
Language is offensive.
And screwing over retail. That's not his intention.
He's already
a good, genuine person. He is doing a lot of amazing things for the company and listening to us as retailers. He's taking our ideas and implementing them, and it's huge.
And you keep
The
paying
fact
him
that
for
he is
it.
talking to us and conversing and taking our ideas and implementing them is a huge thing. I don't know a lot of CEOs that interact with their base, and I think it's amazing. That's pretty much all I got to say. Thank you.
Awesome. Thank you.
Thank you, Kat. Hey, I know Nachi wants to drop something real quick, and then I'll get to
Barbecue
Batman,
back up to
I'll get
VWAP
Keith
here.
and
Yeah.
Rahul. So sorry, guys.
Still on
Get
our side
Nachi.
divergence. Pretty
Bill,
subtle
just
there on
one more
SPY, but
thing that I forgot to, the crime of August 22nd. I wanted to ask you if you know who FINRA is, and I'm sure you do, but I just want to make sure before I go on to say, do you understand what FINRA does and FINRA is? And if
I
you
do.
think back to, yeah, and if you think back to someone like you and I who was in business during 2008 and 9 when there was Freddie Mac and Fannie Mae, right? They were government subsidized entities, right? That were given carte blanche behind the curtain money to move with, right? So FINRA, which is in their own mission statement, to enable investors and firms to participate in market with confidence by safeguarding its integrity. Like, I can't even read their mission statement without vomiting, because on August 22nd, I just really want you, when you're researching this, the most important part of the referee being removed, which they called a holiday, and then they called a system outage. Then they weren't even able to give complete definition on what occurred that day. But on August 22nd, when the APE dividend was, the yield, the utility dividend, the yield to the common was supposed to be issued, they also had this holiday outage. We don't even know what it is today, but when the self-regulator, referee moves itself from the playground, a lot of evil shit happens. And I think you can understand that, how important it is that we do have some type of regulation that's got some
not a
footing,
real
some
good RSI
foundation that
divergence
actually
here.
does have some teeth that protects all that are involved, not just the 1%, as you are a part of the 99%. What I really like about you, Bill, and minus our faux pas of the past, is breaking down the philanthropy business and the giving and the charitable business, which uses tax accounting and Enron like schemes to actually benefit them profitably. Like Enron like schemes have been existing for a very long time. These abilities to LPP.
Oh, dude, we've got an RSI
or if you
divergence
have
on
enough
GME
money to set up an S corp, an S corp, an S corp, an S corp,
on the daily.
I can decimalize my money to actually my losses are swiped away and my gains are actually earned off of even that which is philanthropy. So thank you for doing something that I think is
See
revolutionary.
what closes today, but
And
I
I
might
do
close these
believe
calls.
what I found here over 2 years ago with this family, who's been with me through a lot of different things, mental health, a lot of different things that we talk about to help strengthen each other through really, which has been an emotional war. So I want you to look at FINRA's involvement on August 22nd as well, if I may appeal to you, sir, because that is the one thing I forgot to mention. The Robinhood spoofing of options, that was part of it. You also had Rex shares out of Connecticut, which I personally wrote a letter to, broke rules trying to create ETFs on a PFE, preferred equity, which is a no. They were trying to combine AMC into that fold. There were so many of these things that have never ever happened before, that if we continue to allow these never ever happened befores happening, our kids, where is their money ever to be found safe when the regulators, self-regulator, is able to make rules by which they say that they will no longer be safe only under the standards by which they say money is safe. So I meant to close with that. Thank you, Checkmate, for the last, and thank you again, Bill.
Yeah, thank you, Nachi. All right, we'll just go a couple more. We'll go Keith and Batman, and then Mahul. So Keith, go ahead. I know you handed for a while.
Oh, hold on. I sent an invite to Begums to come up, and he might be at work. So if we can squeeze Begums in, I'd
Someone
really
works in this
appreciate
chat?
that.
Okay, yeah, sure, it's fine. Yep, I see he just popped up. I didn't see he was in here. Begums, can you hear us all right?
Sorry, I should be more kind. I had to.
Yeah, how's everyone doing today?
Good.
This
Please,
guy has
yeah,
a
you got
job.
the
Let's
mic.
let him go. He was on his break. Buys moving up. RSI
So,
divergence.
a lot of people want me to come in here and talk about what's going on with the movement and what I believe it stands for. And, we find out as retail for the last, ever, the entire system's against you. You have market makers with rule exemption 203B, and they can fill shares without locating. So right now you have, Citadel going on Twitter bragging about how they do $15 billion a year worth of stocks, which is technically them selling us synthetics, or them selling us what we should be calling market maker exemptions. So the entire time you sit there and you find out the media is against you, you got Kramer, you got all of these regulators that are supposed to be protecting retail, protecting all of us. Instead, they're sitting there helping them. They have a thing called an acceptance waiver and consent. Accept waiver and consent allows crime. They're allowed to do it, never admit guilt, and they just pay a small fine and just keep going. You have people like Jamie Dimon and JP Morgan with 236 violations, which are all felony crimes, but they're able to continuously trade in the market. You have your government who's supposed to be helping you, politicians who are sitting there going to these guys, Citadel's office. Janet Yellen makes more money a year doing speaking fees for Citadel than she does at her own government job. And this is the problem. You have everybody involved in this 1% club against everybody. And then what do they do? Just like they do with politics. Everybody, you got GME, you got AMC. We're going to put you guys against each other so you guys don't focus on the real problem, which is us. And now they sit there and they look over and go, hey, retail might be crashing banks now. Now we got to get short selling bans against banks. And this is what it is. It's always, if you guys do the things that we do to you, to us, then we need laws, then we need regulations, then we need rules in place just so you guys stop it, because the entire system is a joke at this point. Everyone is over leveraged. You have banks out there over leveraged 100, 200 times their position. You have JP Morgan, who has a bigger gold position in shorts than their entire assets, and nobody cares. They let these guys go. They manipulate the stock through ISDA. They manipulate it through total return swaps. They manipulate it through the OTC market. And then they sit there and have everybody go through payment for order flow. They have brokers that literally every time you buy, it basically hurts the stock, because what it does is you're creating synthetic outstanding shares. So you're basically raising the float whenever we buy, because what they're doing is giving you 203 market maker exemptions. So they're still selling shares that aren't there. So this entire movement is more to me than about AMC. It's about corruption. It's about the United States, pension funds, people that are being stolen from every day, trillions of dollars being taken out of the economy, put into the Virgin Islands, put over into all of these other places. And then they come up to us and say, hey, we're broke. But yet you have companies out there that owe trillions in taxes, and they come to us. We don't have any money. And now what they're going to do, and then you find out the entire market's manipulated. So now what they need to do with treasury bonds, the government's broke. So what are they going to do? They're going to crash the market to create demand for treasury bonds. And then when you look up how much the 1% actually owns in the stock market, they own about 98% of stocks. I'm going to say it again, they own 98% of stocks. And people wonder why retail doesn't have the ability to move stocks in the way that we should. Because when we do pile in on anything, well, it's corruption. Also, no, your collusion, you guys, we're going to go after you guys on Twitter now. So, like I said, the United States is being stolen right in front of our eyes. And the criminals are being just slapped on the wrist through acceptance waiver and consents, because they will never have to admit default until that is gone. But that's all I wanted to say. It's just the corruption is, the United States is being stolen in front of us, and this is what this movement really is about to me.
Hey, thank you, Bigums. I appreciate that. Chris, I got to get you up here, man. I'm sorry to everybody else again. I normally get some FU DMs, but please come on up. And if there's anybody, Bill, I will tell you, who can probably talk the fundamentals as good as anyone in this community, it's going to be Soika. He holds spaces a couple of times a week, but I think you'll enjoy this part. So Chris, please come on up here.
Hey, I appreciate the opportunity. It's an honor to be up here. Everything that Bigum said, I agree with. Nachi's actually probably one of the best at understanding the market as well. He's got great insight on most things. I do take a lot from both of them, and a lot from other people in the community. And I have learned from so many other people in the community, a lot of the people that are up here. So a lot of credit to the people in the community and all the people that do the work and put the things out there. Check, you're no different. All your decodes and stuff like that, the things that you're looking for. We know that they can't communicate with us out loud. I don't know that we're always correct, but I know that they're trying to communicate. So, with that being said, I'm just gonna say I believe that AMC is the best investment of the 21st century, the next Amazon. It has a potential to be the 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 driver of growth for the middle class and working class people who can afford the stock for generations to come. And it can be like that, that Coca-Cola of, the 1930s and 40s, where it drives so much growth that it creates so many millionaires, it creates so much wealth around it because of the access that we have to it. We can drive growth in this company that we can't drive in other companies. We can't drive growth in Tesla. We can't drive growth in Ford. Hell, we can't even drive growth in, companies that sell $1,000 products, just, clothing stores, for instance. But we can always buy popcorn and a drink. We can always sit down and watch a movie. And this gives us access to a business. This gives us access to a business that can become a conglomerate, right? We saw this in the 70s and 80s, where they started banning monopolies. They started saying, like, we're going to come down really hard on the monopolies. You're never going to do it again. So what did everyone start doing? Everybody started becoming a conglomerate. They started to really spread out and buy in different areas and just try to own everything. You see this with Kraft. You see this with a bunch of cereals, a bunch of food companies. You think that they're these, like, oh, Heinz just owns ketchup, and then you look at their catalog and they own all these things. You look at Amazon, and I think Amazon is the right comparison for this company. This company has the potential to be the next Amazon, but for entertainment. Why? Because we warehouse everything that other people make. You make the movie, we warehouse it for 45 days, just like Amazon does. Hey, you want to put your stuff in our stores, in our shops? We'll play it for you. We get 50% of that, but everybody that comes in with traffic, popcorn and a drink or some concessions, and you're out the door and we make some money. Great business formula, but it's not everything. It starts when we get into, oh, we're going to sell popcorn. We're going to move into a billion-dollar popcorn industry. Yesterday, the move with Vudu allows us to warehouse all of our movies. This is a direct shot at streaming. Oh, you guys can rent every single and stream every single show that we have, but you're never going to own it, right? You're never going to own it. The second you cancel your $9.99 subscription, all that money that you pay to us is ours. You never get to own Captain America. You never get to own your favorite Marvel movie. You can't bring that with you when you leave. So why do it? Because it's the easiest way to take subscription fees from people and never actually give any ownership back. And this company gives us ownership of something, of everything that we touch. We go into the movie theaters and we buy this stock, and guess what? We pay ourselves. The credit card swipe is one of the biggest money-making machines you'll ever see, and nobody talks about us getting a credit card. We have, 4 million people. It's an army. This is literally a standing army that goes to AMC movie theaters and that owns this stock. And a lot of people don't recognize just how powerful that is when you have 4 million people sitting there willing to go to movies, going and swiping their credit card, going and buying popcorn at Walmart. You watch the revenue on the books and it starts to switch over. We used to make just less than 50% of the domestic box office on paper. You'd look at the domestic box office, we'd make $1 billion, and then we'd come in somewhere around 480 million on our revenue. And it'd be like, okay, well, we made this because we take this cut. Now we're making like 55, we're pushing towards probably 60% of that because we've bought all of these other theaters on top of the fact that we have these other revenue streams coming in. So as we start to become more of a conglomerate, we start to look at the most attractive businesses out there for entertainment, and we're becoming stronger every day. We've gotten bands like Metallica, Billie Eilish, some of the most popular brands in EDM music, Odessa, they're all coming to us and they're starting to flock to this brand. And they
Eyes climbing
want
up
to
there.
be a part of the ape movement, we believe, because they know that you don't make money off being part of a corporation that wants to sell to the apes. You make your money wherever we go. We're the ones with the money. We're the ones with a lot of um, access to capital. Everyone that sits on a board goes, how do we get these people to go buy this stuff? How do we get all these people to buy our product? Well, the easiest thing for us was, hey, we're the shareholders of the company. So we're buying something from ourselves. So give us what we want. When we talk, people like Mehul are holding spaces like AMC Ideas. What would you buy? And guess what? The board sits down and they go over it and they say, what do you guys want to see in theaters? What do you guys want to what do you guys want in your concession stands? Merchandise, comedians, you name it, and they're all starting to come out of the works. Bert Kreischer just launched The Machine. Sebastian Maniscalco just launched his movie. They put it in theaters for a reason. They see us. We're a very observable group because we're 4 million strong and we're so damn loud that they have to pay attention to us. So now they're like, well, there's an opportunity for us to go back into theaters, because if these apes come out and support this, they put some money in my pocket. They put some money, they help themselves. Everybody is happy here, and then we drive growth for the company. We drive the brand forward with everybody else. Remember, we're very different than every other company out there. We are 0.00001% of moviegoers. There are billions of people that go to movies, and we're 4 million, and we go multiple times a year. We're able to drive growth like nobody else in the world. All we need is to just keep this thing alive long enough to pay off the debt, and this
probably have a
becomes
little rally here.
a snowball that can't be stopped.
I think we still feel like Gap passing Cloud.
You'd have to blow it to smithereens with a nuke. That's how big it would be. Because every single person here has no reason to leave if we continue to grow. And what's stopping us from growing? What are you going to do? Tell us that we can't go to the movies? Tell us we can't go buy popcorn at Walmart? Tell us we can't rent a movie on Vudu? Tell us we can't swipe the credit card? You could stop the world again with COVID. We're still going to find a way to swipe the credit card. We'll still find a way to buy off Walmart and have the popcorn shipped to us. There's nothing you can do to stop this at this point. It's a revenue generating machine, and it only gets bigger from here on out. I've suggested that we're going to get into streaming and production. And then guess what? We hired a production studio member on January 1st of this year. We got rid of the big bankers. We got rid of the institutions.
By the way, I agree. I agree. They can't stop it.
Thank you, Pulte. And I'm honored that you're listening. I didn't know if maybe you're like, you know what? You're so honorable for just relaxing and letting people talk. That we are so big when we all interrupt each other in this group. We love each other, but we all interrupt each other nonstop. And I like for you to let Bigums talk, and for you to let these people talk. We are so honored to have you here because we see you. You're very visible in the community. You're very visible on Twitter, and it is such an honor to have someone with so much access to capital who actually cares. And I think you should know that we actually care about you. We know your story. People have spread your story around Twitter, how charitable you are to people, how much you care about people, and we're like, yo, if there's something we can do, like if we can just let this person know what we think, because your ears aren't everywhere, your eyes aren't everywhere. People as smart and as wealthy as they are, they don't have access to all the information just because they snap their fingers. They do have to sit down and read. They do have to sit down and listen to someone. And I can tell you right now, in this room, there are some of the best and brightest minds of the 21st century when it comes to investing, and we'll never get a chance to sit down in those boardrooms. We'll never get a chance to sit down in a bank conference. And we care more than anybody could ever imagine. When I wake up at 7 in the morning, I'm sitting here listening to Mayhew and Checkmate and Batman and Bigums and Nachi and Keith and Mayhew and so many others in this community. We're sitting there, you know, Boss and PG, we're listening to each other all day, every day. And we put 12 hours a day sometimes into this movement, just doing research, watching box office numbers, trying to figure out ways to, you know, do things. I don't know if you've ever seen the guy David versus Goliath, but, you know, Eric Stanley, yes, Eric, thank you. David versus Goliath has a thing called AMC Gorillas, and we advertise movies for movie theater production studios. We advertise merchandise for the merchandising side. Instead of them having to come out on Twitter and do this for themselves and pay somebody, we'll go and advertise this everywhere for them. We are the advertising machine. We will advertise for all of these people. Django Houdini, thank you. Yes. All of these people who are texting me and telling me, like, don't forget to mention these names. All of you are so damn important.
Let me ask you this: who's going to take over after Adam Aaron retires, or God forbid something happens?
That's the, you know what, man?
I'm out of
That's
my long there.
everyone's
I shouldn't
greatest
have
fear
waited
is
so
that
long.
Adam has to go. I honestly can say, me personally, and I think I can speak for many of the people up here, love that guy because of how he's actually interacted with us. He's shown up to theaters. He's answered all our questions that he can.
Yeah, if you have a link to the court hearing,
genuine, very truthful,
send it to me on Discord. I couldn't find it.
Very humble person to
For
even
barbecue.
show up. I mean, the man's a Harvard graduate, 30 years, you know, of CEO work. I mean, it's kind of like when, in my opinion, looking at his track record, he's kind of like one of those like retired all-star baseball players, right? You know, he's like in the mention of like Hall of Fame when it comes to CEOs, and he's still kind of like has his fingerprint on the company.
Yeah, but it's still also an opportunity, right? Because
absolutely.
I don't know if he could become chairman or something,
He
but
is
you
the
know,
chairman.
whoever his next.
Yeah.
Well, I know, but I'm saying no. Bear
Sure.
with me. You know, be the chairman and have younger people underneath him. You know, continue to take more and more of the day to day. You know, he can sit from that perch if he has credible young people who can drive it to the next level. I mean, I just think that would be incredibly exciting. You know, if somebody can really pick up that torch.
Who knows where Ryan Cohen will go? I know he's the chairman of GME. I mean, there's so many opportunities to bring in the right people and I know this word is used kind of too much now lately, but to groom a young CEO under his lead, you know, under his leadership as the chairman, I'm sure he would have no problem with that. He's spectacular at everything he does. It's pretty hard to get the apes off track, and I think that he would really want us to know who he picks, and I think he would want us to accept who he picks, but I think he would also want us to pick someone that not, I mean, like the shareholders, but I think he would want someone that we know so that we would pick them.
I think he's committed to the breakthrough years, though. I think he's said he's committed to seeing what he wants to see, which is checkmate
Pops back to
unfold,
10.
quote unquote.
He does still feel healthy.
Thanks,
He
Ehab.
does still feel healthy, and he does still
Appreciate
feel like doing this. He doesn't.
Appreciate it.
I don't think he's looking for his
Guy.
exit anytime.
He just put Silverback in his name, so I think he's vibing right now.
He had mentioned specifically, you know, again, in one of the meet and greets, he had specifically said, I don't know, he said, I might retire at 72, 73, 74. He said, I haven't, you know, made a decision yet, but, you know, he's going to continue to be around to see this thing all the way through.
Yeah,
no
6
matter what.
27.
So
Consolidating.
he's not going to make an exit anytime soon. So.
Couple more things. Rocket hosting spaces all the time. Dragon all the
moving up.
DD. Average Ape, you're unbelievable.
Could have held it. Oh well.
So many of you, thank you so much. I'm going to
Hard to
bow
see his
out.
channel here.
If there's any questions, thank you so much for letting me speak. AMC, greatest investment of the 21st century, and I'll leave it at that.
If you ever have time and want to listen in, Soika's rooms are amazing. They really are. So he just gave you a little taste of it, but he goes into all of the future ideas and endeavors that AMC has, and it's really interesting to listen to.
Yeah, this one's more focused about you, but my space, all of our spaces are very much more conversations than monologues.
Yeah, Keith.
But I think the greater question for us all here in this room is at what point do we recognize that crony capitalism has taken over and that GDP trading above values that don't make sense to the intricate companies that they're measured by and the indexes, how they're indexed. And index is a very key word here. And how long are we going to actually say that we are in a transparent market in terms of trade from a global disposition, from a currency disposition, which is even being more shifted than ever before? But like when it takes like who would have thunk a small cap company, a couple small cap companies where the derivatives were shut off for those default swaps that they couldn't be paid for on the 2008-9 Fannie Mae Freddie Mac thing I talked about earlier. But like that's the question really, like from big leaders, important leaders that come from business that understands what business looks like and the cost of business and what that looks like on the cost of people, on labor, on everything that's dedicated to make a family business grow, like Bill. But like in the general terms, like what that means for all of us, is it does it become too many people, not enough opportunity because of money being siloed into a top where it can just be chopped off at any time? I don't know. I think that's the bigger story, and I think the irony, and I'm an irony investor, is that you see things like AMC and GME, and particularly AMC, the American movie cinema. Why not tell the
I love
story?
that about irony investor. Tell me more about that. Tell me more.
Well, I think the irony is the whole thing. I think it's everything's ironic here, right? American movie cinema tells a story about how humans could no longer trade the safflower for the flour or gold for silver correctly. The 1-to-1 ratio got so knocked off. Why not tell that story that has been in repetitive giving altruism really isn't possible at the end of the day. Like let's just break it down. Like Bill, I love you. We're like family friends, lifelong friends. We grew up in the trenches together, and I give you $10,000, right? I just say, hey, this $10,000 is out of love, no attachment, whatever. The amount's significant between you and I. Never thought of it, never even going to ask for it ever again. It's just because I care about you and it is the right thing to do in our human nature of love. Then 15 years down the road, I do something hurtful to your most significant other, whether that's a child or your wife or whoever it is. The first thing that most 99.99999, almost to 100, is going to come in my head is the 10 grand or the amount of money that we exchanged. But when do we break through? We break through when the commonalities of money that we made money. We made money out of the trade transaction as a notation. And then out of that notation, money was made to matter more than money itself, which ended up hurting our human engagement. That's the irony. The irony is that theaters have to do with human engagement, gaming stores have to do with human engagement, and the pathway to socialism is by stripping down the retail infrastructure where people engage out public. And when I say socialism, I'm talking about when capitalism breaks down and no longer is its fair value, no longer is the 1-to-1 equals 2 ratio. And whatever that measurement has now become to us here today, it's very important for us to ponder because it does impact, I do believe, the emotions of life, how we feel about life, the hope that we have, because hope is the one element that's stronger than fear. That's the irony, is blast because people are living under a dark cloud that really, in the irony, is 100-year note as we enter the 30s from the 20s that were the roaring 20s that entered into the Depression. We're on that. And that new deal that was made by that government administration where banks and the SEC put in that whole deal because we were a defaulted country is what we're paying for now, way more than we can even imagine. And we're in that simulation. So to me, the irony is that it should be built on the American movie cinema for all to see, where humans are in their truest form. The me, the look at me, I have to survive first. It's all about survival. that's why there's so many multicolored pills for multicolored problems. Let's face it. That's why drugs work. Drug companies work and that business works is because if you create more problems to sell net
The
new
Twitter space is
solutions to,
really
net new revenue that was not on the
picks up a
books,
lot of RAM or
at
something.
what cost?
Weird.
Have we ever measured the cost? And to me, that's the irony. I guess they would call that a monologue by Nachi here. Sorry about that. But good morning.
Now, Keith, I'm sorry, man. I know you've had your hand up for quite a while. Unless like CV Payne jumps in here within the next 2 seconds, you're up.
And then I got about 5 minutes,
yeah.
if that's all right.
Then I'll tell you what, Bill. If you've got anything that you want to, add to the end of this, if you don't mind, we'll get one more speaker in here, and then I'll kind of let you close things down.
No, you have Mehul with his hand up too.
But I'm saying I want to be respectful of Bill's time if he's got 5 more minutes. So, Keith, go ahead.
So far, we've had a lot of people that actually showed you the corruption that's inside the box. So I'm going to try to, in less than 3 minutes, construct that box, which is we call the stock market today, tie it all up and show you what help we actually need in this fight for justice. In 1971, they started the NASDAQ. It was started by a bunch of corrupt people that straight out said, we don't have to put masks on and take guns and rob people anymore. We put on suits and they hand us their money. It was started by the mafia along with the 1%. Over 53 years, they've had Michael Milken and Bernie Madoff. They milked us out of our money. They made off with our money. And through this time now, they screwed up and they gave a bunch of kids $1.9 trillion to invest or for subsidies for the coronavirus. These people put that in the stock market. During this time, not only was it GME started out, they found that it was 140% oversold. During that time, we found out that, hey, there's 30 or more ways that they're cheating the stock market. And every time we catch them, they use a different, they change their tactic. They use a new rule. Then it got down to where they ran out. They created ETFs with a single stock in it. Have you ever heard of that? Then they create FTX and tokenized stocks, whatever you want to call them, when FTX was really a cryptocurrency it's a market outside of the United States stock market. And they was literally taking our stocks and trying to trade it on this corrupt market that had less than 1 Bitcoin in it. So that's the corruption we're fighting here. And then we have a Department of Justice and an SEC that can only slap a couple $1 billion fine on people that are stealing hundreds of billions every single day. So guess what? They're happy about it. They're going to come back tomorrow and they're going to steal your pension or to losing their money and that we're stupid. It's that they're thieves changing the rules during the ball game, stealing our money right out from us in broad daylight. And the SEC has no power to arrest anyone. They can recommend it to the Department of Justice. And we have a Department of Justice that is mostly top 1%. So they do not protect us. They're not for us. They're not making these criminals pay for the criminal activity that they're doing. When they do, it's taken too long. And then they tell us, well, we can't tell you. It's a criminal investigation. But you can tell us, hey, what are you helping us with?
I want to give you about
and
I
so
want to
far,
give you about 30 seconds because I want Bill to have the final word here. I know he's got to bolt out of here.
Yeah, I'm actually finished. So that's the point where if he can help us in any way with the law, punishment to the people that are just flat out stealing your 401ks and your pension funds. You're not losing it because of a down market. You're losing it because of theft. And that's proven with the 1% getting richer and the middle class and the poorer class getting poor. And we literally need senators and lawmakers that are going to make rules that somebody is going to enforce, not with a slap on the wrist like Bigham said, and you pay a small fine. Thank you.
Thank you, Keith. All right.
And
hey, so look, we can keep the space open for a little while. I know Bill just said he's only got another minute. So, Bill, if you want to, give a final word, I want to say this before you do that. I can't thank you enough when we started this, people were saying how much time. I said, I don't know. I said, I asked this guy for 30 minutes. If he gives us 30 minutes, it'd be great. You've been here for over 2 hours. I can't say enough about that. And what you do also as an individual with your philanthropy, on a separate note, but thank you for coming in here and for at least listening to us. I hope that maybe we can do this again in the future. I hope that you will keep up with this movement as well. And yeah.
I definitely will, and I appreciate the education and appreciate you guys having me and being candid. And I don't know any other way to say it than the future is ours. So it's like let's just figure out how to get there and not tear each other down in the meantime. And let's just say I'm going to be watching AMC a lot closer going forward, and we'll see what happens. Maybe I buy something. So we'll see. Maybe I buy some stock.
Hey, Bill. It may take me 3 minutes. If you can stop, you may want to hear this. If you can't stay, that's fine too. It's up to you.
Unfortunately, I have to go. I'm like 15 minutes late to something I had to go to.
No problem.
But I genuinely appreciate you guys spending a couple hours with me, and I look forward to continuing the conversation.
We'll record Mehul and we'll send him to you so you can hear him at a later date.
Thank you, everybody. Have a great day.
Thank you, sir.
Okay. Well, you guys voted, so I left it on. But no, that was interesting to hear. Really, it was. I didn't realize that about their ape shares, that some people didn't get them. So yeah, I mean, corruption all over for sure. Yeah, everyone's looking for community. Everyone wants community, and they've found it. Oh, I just feel sorry for those people. I feel like it's not gonna play out how they wanted, and they're gonna look back and realize they wasted a lot of time and money trying to make stock trading a team sport. Yeah, I saw his link. BP's trying to get him on his show. See me bouncing there a little bit. The international people on that call, I mean, the people talking, none of them really sounded international to me. That was interesting. Oh, the ones that didn't get the divvy. Yeah. No, yeah, I mean, I think they're probably right with that. Like, I'm not denying that. I didn't know about it. That's just interesting. That was even a thing for them. Of course, with the GME split and the divvy not being handled properly, just funny how it's the same thing basically. Yeah, there's not much I can say that's nice about that. I actually do feel bad for those people though. Hope it works out for them. That consolidation on cause them. So I was noticing this little RSI divergence on GME here. If it doesn't rally today, not good. Got a lower high here. It's pretty subtle, and don't want to negate the price action that's nice in this nice channel and uptrend. But the tapering RSIs is just a sign of some weakness in there. Yeah, I'm pretty sure there's like more Canadian shareholders of barbecue than American United States citizens because of the PP show. The 2 seconds all Canadians on that show. Barcoding, back to it. Under VWAP. Thinkorswim, the desktop platform, takes up a lot of RAM. That's taken up. I have plenty, but I'm reading it like lags it down. I'm only at like 48 or 40% on usage. How high the average price per moviegoer became? You mean like how much money they spent? Barbie headquarters Mexico. Headquarters New Jersey. I guess I didn't know that. No. All right, cool. We got the little bounce from that RSI divergence. I was hoping for a higher move, so I didn't capture distance it was sitting here. I think we're gonna get a. I think we'll still get a rip today. Just see if it happens. $5 billion a chair. Everyone notice how when Pulte was on the Twitter Spaces, Ace Ventura wasn't chatting in here at all? Hmm? I'm moving down a little bit. BBBY.mx is listed on the stock market. Yeah, very suspicious, Ace. 25 employees at this Bed Bath headquarters in Mexico. Why is this significant? Or you just let me know? Very interesting. Thanks, Cole. Appreciate it, man. Feel like I need a cleanse from that spaces a little bit.
From what I'm describing, which is
Jenny will cleanse us.
Reaction, but doesn't want to take any downside risk on this because I think that if this stock goes lower,
it's
can
like
potentially go a lot lower and do so in a hurry. And so I looked at selling an iron.
What
butterfly
when bag holding for many years goes wrong.
But I kind of skewed the wings that I chose. I took $17.50 wide on the upside and $10 wide on the downside.
Big boy.
And what you'll notice is the credit is 1025 or thereabouts. As long as it's over 10, that was really the goal here.
Right.
To eliminate the downside risk altogether. Looking for.
I don't know. Pulte's a little tainted now that he's sat through that for 2 hours.
Report, but maybe something that's
I'm gonna have to question his judgment a little bit now.
It's had a vertical move.
Yeah, your downside, you're short a $10 put vertical. You are collecting $10.40.
It's hard to hear that and
right in the $10.45
clear-minded.
So therefore, you have no exposure on the downside, but a big boy spread on the upside. Nick, your thoughts?
It is, and that's why the credit's so large. And
All the same company, the Jersey, yeah.
Max loss isn't zero, right? But it is one-sided. So I think really good lesson in maneuvering the strikes to skew the risk profile the way you want it. Specifically, Alex, to your point, if they miss for the first time in a while, or it falls short, and you're worried about that happening, as you mentioned, you're probably not overly concerned about that miss given their historical performance. But if they do miss, how big could the downside move be? You've completely eliminated the downside risk just by strike choice. And it's really simple math to look at, right? If you're taking in a credit that's bigger than either side of that, you're eliminating the risk on that side of the trade. Just a good lesson in strike manipulation to figure out how to skew your risk profile. You're taking in more because you still have two spreads in that mix, right? You're still taking in a credit on the downside, so you're adding that together, netting out a credit larger than one side. It's a great way to look at managing the risk and directionally.
Alex, I want you to comment on something because you said something very significant and you slipped it in there. What you did was you said your opinion on the stock, and then you
Tune in last 10 minutes, maybe. I mean, that must have been doing something else. That was a long time they had him, and there was. Some guys were sharing something useful as far as the stock. Other people were just talking about their community and corruption and stuff that has nothing to do with fundamentals of the stock. None of it was about the stock, really, like the fundamentals.
Or an outsized move. Because whenever you're selling premium, I think it's important to note that really what you're betting on, or what
it was just Occupy Wall Street on Twitter Spaces, mixed with Bag Holders Unite.
And so if that's the baseline for which oftentimes it is for a pre-earnings trade, Kev, the question that I ask is, okay, in the event that there is an outsized move, where's it going to be? And I just describe the kind of logic I'm applying or thinking about when it comes to Salesforce as to why I believe that could be to the downside. And to sum that up, it's had a huge move. It's getting back to some levels we haven't seen in a long time, and it has a history of basically delivering results that are better than expected. So if it kind of follows that way, and for some reason trips up for the first time in the better part of half a decade, well, I think that could present a situation where you see a downsized move, and so I didn't want that risk for that.
Nick, the expectations are for $1.61 a share on $8.18 billion in revenues. Your thoughts? You had a thought?
Yeah, well, I just wanted the one thing you are.
My Chrome tabs are very laggy.
To the downside on this
I
trade,
don't know what's going on.
Your break even's only about $11 higher, right? So you're
Weird.
half of the expected move to the upside. So if they do well, I don't.
Oh, you guys are able to see the links that Twitch shares, huh?
You just be cognizant
Cool.
that your break even point, you start to lose money at about half of the expected move of earnings, which is about $21 here in the front.
Yeah, if you're collecting $10.50 on the upside, where your risk is, your risk is going to be at $230 and a half.
That's right.
Right.
Yeah, I'm skimming through that article. Cool, that's kind of interesting.
And then you have exposure.
Bagels Unite would be a good band name. Yeah, they'll probably start a band. I don't know if they'll call it that, but they probably have started some AMC bands. Ape band. Band of apes.
The number that it is, which is 725, there had to be a trade-off. That trade-off is a lower break-even. That's right. And so oftentimes if you're wanting a greater break-even window,
All for it though. They're building a community and making friends and stuff, like whatever.
Notional risk value.
I don't know.
Instead of the
Problem.
237 and a half call, maybe you buy the 250 and you really make this a big boy spread. That'll pump up those.
I just hope they don't have anticipation of changing the stock market by buying shares of AMC.
It's going to just come down to the individual's opinion.
You'd think after a couple of years they would understand.
How confident they are that
maybe it started something bigger, and I don't know.
In terms of its rally and priced in.
Final thoughts. Einstein GPT is the name
Einstein.
of AI, and it allows
Looks like Liechtenstein.
their users to connect their data.
Everything Baba. I can see that.
AI models. If they pump with AI, this stock may have to, it could get
Yeah,
interesting.
children's toys.
Smart things like Einstein and other things.
Yeah, right. He just keeps using big words.
What is this Forbes article about? It's just
the buzz right now. This goes back to the haves and the have-nots. So I mean, you could structure a trade just like this on the downside if you feel the other way. But it's kind of there's
because of the pet stuff that Bed Bath and Beyond sells.
like everything's sort of languishing in the markets, and we're unsure about all the macro.
I mean, they sell everything in those stores.
Hey, he said AI, like let's rally
It's not
stock. And we just got to be careful that
like special. They sell pet stuff too.
Too uncontrollable in the short term. That's the beauty of options, right? You want to take a 2-day play, you can. If you think that this is going to burn off in the next month, you can take a 30-day look at this stuff. And that's why you can structure the timing really well. But
Nice gamer.
Point on that too.
Yeah, basically.
Back to the first thing I said at the very beginning of the show in the last segment. How significant was yesterday? Was yesterday the bubble being pricked when it comes to these AI things? You see C3 AI down, you see NVIDIA way down, you see Microsoft lower. I know Salesforce isn't lower now, but is the AI
But they're
hype,
in the sector.
Is the AI hype starting to be on the backside of that roller coaster ride as opposed to the ascending side?
Not like this stock hasn't rallied. It hit $222 yesterday before backing off, and then actually unchanged today, but it backed off from its all-time highs. But you're right. It's overbought on a technical level. The RSI currently right around 72. So you can say that on the short term. There's a lot of reasons why there could be a pause unless they do something like NVIDIA. But it's a good point. They're not the first AI company to come out, right? They're the third or fourth or fifth. They're later. And so it's one idea to make a bet that very possibly some of the shocking news might be out already.
Very last thing. I'm defending the narrative for the strategy that we looked at.
Of course.
If you disagree, the beauty of the market is you can find something else and you don't have to do this type of strategy. There are countless ways to take advantage of a bullish move. There are countless ways to structure something that can benefit from a different reaction or a different thesis. So I'm just providing one side of an argument. You can make the argument elsewhere, and the beauty of this is the customization and flexibility of options probably will allow for you to capitalize on that.
But the genesis of the trade should be your thoughts on the stock, and then the next step is to fit the right strategy to that idea. All right, guys, great conversation as always. Alex Coffey, thanks for coming out and spending some time with us.
But they might not be bag hold. I mean, if there's a turnaround, and it's not just a quick play, and there's an actual long-term turnaround fundamentally with it, then they don't have to be back holders. Because hopefully they've averaged down. They've gotten their price at least to like $1 or something. And then if there is a turnaround, then it's quite likely that they'll be in the money for the long term in it. So you can always sell for a profit. Sell cover calls or whatever. I hit you personally. Respectfully. Hey, he said respectfully. So when's the hearing? That's something I'd like to hear. Oh, my Mullen calls. Suck again. The EU has frozen more than 200 billion in Russian central bank assets since Moscow invaded Ukraine. Russia's economy needs a 6-day work week to help navigate sanctions, business groups in Russia have said. U.S. 1-year credit default swaps rise to 76 basis points from Tuesday's 56 basis points. Strength of the U.S. dollar should continue as rival currencies fail to present an attractive alternative, according to Goldman Sachs. Should continue to rise, or just continue in general? SNB chairman says he's concerned about speed and size of outflow of deposits. Issues need to be looked at. The global number of ultra wealthy individuals fell 3.8% in 2022, about 580,000. Yeah. Do you have a link for it, Wayne? Can you send the link? Oh, show. Why is my Chrome going so slow? Weird.
One of the highest correlations of web traffic to revenue.
Like
all the companies
restart.
that we track, I think they're 0.99, which is incredible.
My CPU is
negative 5% on a year-over-year
Chrome is
basis.
really
So
lagging
people
down on my
are going
CPU.
to the website less, not nearly the negative 30% that
Kinda
we
weird.
saw. So they're doing better there, but still the trend is definitely going against them. When we look at their revenue data specifically, the bar chart revenue data, you can see right when the pandemic happened, but you can also see the guidance that's coming in. It's pretty weak. So we've got the current quarter is down. I think it's about 30% on a year-over-year basis for purchase intent. Now that's people talking about, signing up for Chewy. You don't say every time you get an order, you don't go online and say, I'm getting a new shipment from my auto ship from Chewy, but you do talk about when you sign up. So these are kind of new customers, if you will, and the new customers are not coming in at the same rate. And they actually talked about this on their last earnings report. They talked about how, first
This is
of all,
how Tesla got started in Mexico?
on earnings, but their
By
number
starting with a
of users was down. And that's not what the street wants
Oh,
to hear.
something you're
So stock
sharing.
reacted by selling off about 5%. When we look at this company, that they're doing a great job of keeping their customers and extracting more value out of them. They're getting about 15% more customer spend on a year-over-year basis than they were before, close to around $500 a year. Their happiness is extremely high, 83 to 85% over the last year. They've moved up. They're actually higher than they were during the pandemic. They are the epitome of keeping customers happy, but they're
No way,
just
that's
not
crazy.
drawing new people in. I think that's really the problem that we're seeing. So we've kind of got a mixed bag. We've got the trend going against them. We're seeing a decrease in the number of customers, but here, as you can see, happiness. I mean, it's hard to even come up with who to compare them against. We threw Amazon in there because you can get so much online, but then we also put pets on there, and you can see the difference. I mean, 85% happiness is just ridiculous. And again, that's up from 83% last year. So they're climbing on it's really difficult to improve once you get this high, but they're still able to do it. So this is the strong side. They're holding customers. Customers love them. They're not going anywhere. They're spending more. But the downside is less people are walking in the door, so to speak.
Musk.
So, kind of a
Musk guy's idea because he saw
neutral outlook on Chewy.
barbecue out there in Mexico. That's crazy.
Customers. That's the key to growth for this company.
With the 3% move today down, Landon, they're at lows basically, not seen since last June. So it's, the trend continues here. earnings, expectations wrapped around zero, right? I think we saw a consensus of between, plus and minus 2 cents. So really kind of languishing from an earnings perspective. Still $7 billion in revenue, but that happiness score, I did a little survey here around the office, and folks that use them love them, right? And honestly, I ask if yes, then I love it. Perfect deliveries. It feels like it almost feels like they're one good marketing campaign away, right, from showing people how great the service is, because you just hear so many people really enjoy, not having to lug the 50 pounds of dog food home or go get the the receptacle bags in person. So what do you think they need to do? What does the street need to hear to turn this around in terms of short term or maybe medium term kind of stock price? Is it a marketing thing just to get people aware, or is there something else that you're kind of seeing that's driving this?
It's all customer acquisition. That's it. They have demonstrated a tremendous ability to hold customers and to get them to spend more once they're customers. What they've not done a great job of is getting new customers. I mean, they were in the right place, right time when the pandemic hit, and pet ownership skyrocketed. Everybody wanted a new friend in the house, and that happened, and they benefited from that. But that happened because of circumstances outside of their control. They didn't drive that. What they need to do is they need to figure out how to acquire new customers. And, they can do it at a pretty big loss. I mean, that needs to be a loss leader for them. Customer acquisition does. They need to be able to pay a lot of money because, again, they're keeping these customers for a long time and they're increasing how much they spend. So they really need to focus on that growth side of things. And I'd be willing to spend 6 to 12 months worth of revenue per customer to get them on board because they're not going anywhere. But so far, I don't know if they've just not been executing or they've not been aggressive enough. But if I'm an investor, I want them to tell me that they're going crazy for customer acquisitions. They're going to spend a ton of money. They're going to do it as efficiently as possible. But the main objective is to get new people signing up because nobody quits and they just spend more money. If I heard that as an investor, I'd buy shares, but I haven't heard that yet.
Landon, they're enlarging their footprint, right? They're giving online vet visits. They're giving pet insurance. They give out food samples so your dog can try different tastes. They're making pet owners, as your data shows, very happy, but they're not making investors happy. Is this as simple as something we've seen across all e-commerce, which is some people, some percentage of consumers are just going back to brick and mortar. They'll never be comfortable with e-commerce. Is it something as simple as that, and then over time that the overall growth may slow, but it's still going to grow, Landon, right?
Yeah, I don't think it's as simple. I mean, I think that over time, everybody would prefer to have something delivered right to their house, right? I mean, we saw that with the pandemic, all kinds of demographics of people that were not used to buying online started buying online. I think that maybe pet food is one of the last frontiers of people willing to jump into that bag. But yeah, I think that once you show them and once you get them in, they're good to go. So I think they just don't have a great marketing campaign, great customer acquisition strategy just yet. But fulfillment, home run, grand slam, they're killing it. So, if you're investing, you want both of those pieces. Right now, they've got half of the puzzle. They just got to figure out the other one. I don't think it's a matter of we can never.
Dude, when's AI gonna offer shares?
Like to go back to brick and mortar now. I think that they've got a great product.
Like NVIDIA, they should.
Once they show it to people, once they get them in, they'll keep them forever. But forever, it's just a matter of getting.
Definitely need to offer shares.
Landon, the conversation continues on Chewy. We'll take a look at the earnings.
1.3 billion.
Landon Swan, thanks for coming on. As always, great to see you, and thank you for the.
Stop looking at me, Swan.
Good day, Landon.
Thank you.
All right, Nick, you have a trade in Chewy. I would say it's modestly bullish, but it's a relatively fundamental trade. What do you got for us?
I think you're just listening. I don't know. We listened to like an hour of it, and he didn't talk at all. They just fired off ape after ape.
If they do anything other than bomb out, right? If they have positive.
I mean, I guess he didn't really have much to say. He didn't ask any questions. They weren't really sharing anything other than just like emotional stories and
which I think is possible given
just
the caveat. People are showing up.
There's nothing for him to ask about.
And I think that to me is the wild card. You hear the customer acquisition piece, but what is the revenue?
No, he said he was interested. He said we'll probably be buying shares. He just wants to be a man of the people.
They have to
So
figure out
doesn't matter to him.
you know, what is essentially an old school marketing problem.
He just grew his network by whatever how many apes there are, 100,000. That guy said 4 million. I don't know how they decide that, but
There's all kinds of factors here. Like as the population ages, you don't want to go to Walmart and buy 50 pounds of dog food, right, and hurt your back. Like it shows up at your doorstep. Right. Like there's so many angles they can take to acquire customers. To Landon's point, they haven't hit that out of the park yet in terms of getting people to show up, because it literally fell in their lap in terms of getting so many new customers flooding in that couldn't leave their homes, and they have to translate that. So I agree that's the biggest thing. Much more simple strategy here than we first talked about, Kev. I went out to the end of June thinking that if these numbers are anything less than terrible, because they've already been pretty beat up, we could see a little bit of a grind back higher. So looking at selling the 27-22 put spread on the June end of month options, June 30th. So
June 30th expiration. That's very important. You didn't go this week. You went all the way out to the end of the month.
June 30th, also exactly 30 days out in terms of expiration. So you're giving yourself a little bit of time. Obviously the vol is going to come in more in the front month, right? But there likely will be a vol decrease across the board. You're only
short
30
about
days out.
130 in Vega.
Not much Vega, right? And it is a long delta trade, right? A little bit of a delta there. The example we have here is setting it up. It's a 4-to-1 loss to profit. The reason that looks that way, obviously, is because
he still looks like a nice short for that gap fill.
Right?
Down to $4.
Obviously, looking at the risk profile, your max loss is $400 to the downside. The example, it's about $3.90 now. You can get about $1.10 for it now, right? So about $3.90.
Same with Fubo.
But you just need
nice little gap fill to 118.
Again, this is taking into account the fact the stock's already down 4% today. So just fading the move a little bit that's already happened.
Upstart looks like it's maybe topping RSI divergence.
You have about a 12% move to the downside, which is just outside of the expected price range, and be right at your break even here. So you can get a bit of a downside move, still be okay on this trade. Obviously, it's going to expand. It's going to look like a paper loss, but that actual break even at expiration, you've got quite a bit of room, a couple percent outside of the expected move. The other thing here I just want to bring up, we kind of got into a deeper conversation on our first trade. You don't have to look at that sort of hardline risk profile and just wait, right? You can manage this trade. If we do get a bit of a pop and vol comes in, a pop in the underlying price and vol comes in, if you're selling this thing for $1, you might take a couple of them off for 70 cents, right? You might be able to profit quickly, even though it's a longer term trade, if you get the move that you're hoping for. So with vol coming in, you may be able to realize 30 cents on this pretty quickly. It's not like one of these butterflies that you're going to have to wait right till the end for that trade to move. You could see a price decrease. So managing this a bit sooner, not just putting it on and walking away, I think is just an important thing to talk through.
Yeah, with 30 days, it's not going to go to zero tomorrow after earnings.
Right.
All right, great idea, great thoughts on this trade, Nick. Let's take our final break of the show and go back with George Tillis. We're talking about CrowdStrike, the cybersecurity name. They also have earnings today after the bell. Take a quick break.
Might be getting a third RSI divergence on Neo. Dude, they do $16 billion in revenue? Quarter? Market cap on this thing. 12 billion. Wow. I mean, they're just burning away money though. Jeez. That's a ton of revenue. You figure out how to get their costs down or something. It's not bad. Might actually average into the Neo. Oh, that's right. They have earnings coming up. Fine, making a move up there. BWAP. Liechtenstein.
Back above 10 million. This, I think investors gearing up for the possibility that this could be just one of 5 this week, Kevin. The SPX down to 4166, the Dow down to 32,739, the NASDAQ bottomed out at 14,216. I mentioned the Russell, it got down to 1736. Now, to put this in perspective, I think it's important, right? Last week's low in the S&P is down at 4103, so we're still holding above that. Remember, the NASDAQ just rallied 1,000 points in a week, so a bit of a pullback might be healthy at this point. You've got the dollar, which is inching up to 104.50. We've seen rates on the rise recently, so again, I think it was just a matter of time when, not if, in terms of a pullback with that 2-year this week back above 4.5%. But I do want to point out the Dow is now back below the 50-day moving average, which is key. If this is going to build into something more in terms of some selling, keep an eye on that March low in the Dow. That was back around 32,000. So this could lead the way into something bigger if it continues to develop, if the jobs numbers come really strong. But something to watch here. Again, just a bit of selling here this Wednesday as we head into the middle of the day. But a lot of focus on this as we head into the jobs reports later this week.
Ben, real quickly, this 2-day move in crude oil, natural gas, pretty
big rejection on VWAP there.
Especially, you know, we have an OPEC Plus meeting coming up the next couple days.
Yeah, that's probably what we're seeing in terms of some of the intraday volatilities and traders gearing up for that, right? A lot of contention right now between Saudis, Russia, ultimately, and some of those production levels, which really have stayed.
I might be building the cup
levels.
here.
We've got demand concerns in terms of China, the numbers out of China and Europe today, for that matter. I mentioned rates a minute ago, the strong dollar, and that all feeds into some of the intraday volatility.
Dude, my browser is just lagging.
Still 1% here, but crude again came off this morning down to $67. We recently saw a sell-off from 74, 75 down to this level there. You can see some of the weakness. We're testing some key support. Goldman talking about some OPEC production expectations remaining unchanged. So yeah, a lot of gearing up for that OPEC meeting over the weekend here. A lot of focus on Russia, a lot of focus on the US dollar, and some of the recent weakness we've seen in crude trading down on the day by about 1% here in the WTI, Kevin.
Great job, Ben. Thanks for coming on as always. Have a great day. We have to fly. Thanks, Ben Lichtenstein, as always, host of the
Lichtenstein
at 8 o'clock Eastern. Now let's bring in, live from Salt Lake City, Utah, Mr. George Tillis to look at our third and final trade of the day. George, we got to do a quick one here. CrowdStrike. What are you seeing?
Oh, big flush there on SPY.
Security, isn't it?
It is. It's one of the leaders in endpoint digital cybersecurity protection. It's all basically cloud-based, and they actually have quite a large business in the public sector alongside the private sector enterprise space, Kevin. But if you consider what's going on in the software application space, we've seen tremendous trends, especially since the beginning of May. And of course, the cybersecurity names have participated alongside those other software applications.
Good afternoon, Jay from the Bay.
A lot of the technology names. But if you look at CrowdStrike, things are starting to look a little interesting from the standpoint of valuation relative to earnings. Now, considering they're expecting about 50 cents a share in terms of earnings, that's about 37% higher than the same quarter last year at 31 cents. Well, at the same time, their sales are they're increasing by about 37% compared to last year, about 677 million versus 487 million. I think the overall growth for CrowdStrike relative to valuation is starting to look rather compelling, considering it's growing.
American Bison.
On a forward basis, about 52%. These are the
about 89 Costco shares.
While at the same time, it's trading around 6
You on stream?
earnings, so slightly higher than one times.
Tell me what you're thinking with that trade or investment.
It's made a tremendous run year to date.
Pretty significant capital.
I can see why a lot of analysts, in fact, recently Wedbush upgraded the stock, because I think it's starting to look attractive as a growth company, but it's also, again, starting to trade at a reasonable price.
Yeah, George, we got to go. We're running Lloyd on time, but great coverage of CrowdStrike as always. Have a great day, George. Thanks for coming on. Nick, let's get to the trade real quick. George brought up a really good point. The forward PE of 58, earnings growth 50%. This stock is still not expensive.
No, and you look at the historical vol and the implied vol, Kev, you can do that on the analyze tab under earnings. the historical vol is extremely low. It's one of the lowest, vols going into earnings that we've seen. So I think it's a really interesting setup here for. I know you've got a trade to talk about, but it's a really interesting setup because with all the upside we've seen, if they miss, if they waver at all here, you could see a bit of a downside move. But the vol is just not pricing that in.
Expected move about $17. So what we did here, looking for a move as we're running out of time, is we did the long iron condor where we buy the verticals instead of selling them. We bought the 170, 175 call vertical, bought the 145, 140 put vertical. That's in line with the expected moves. We paid right around $2.50 for that trade, Nick. This is one that loses money if it stays in a range. That's the risk, $2.50, and it makes money if it breaks outside that range towards those short strikes.
Truly neutral. Your delta, I bring it up as a one lot, 0.03 delta, 3 cents delta.
BKKT.
Very low.
I don't know, Ronald. We looked at it yesterday.
And that gamma will grow as you get further and further out. The theta is negative.
Let's hear some words that aren't in chat that aren't control V'd.
But you've positioned this where you're expecting, kind of unlike what Alex was talking about, really honing in on a direction. You're like, I don't care. I just need this thing to move. And given the fact that they've been up so much, if they beat, great. If not, if they miss and it's the vol's underpriced, you get the move to the downside. You kind of throw your hands up and say, I don't really care. I just need a big move. And we've seen a lot of those in these techniques.
This is the opposite of Alex Coffey's trade. You're looking for a big move here. We did give ourselves out to June 9th, but buying the call spread, buying the put spread, paying the debit, looking for a move outside the range. All right, thanks for joining us today. Thanks for Nick Theodorakis for hanging out with us. Thank you for everyone that coming on, and thank you for watching our show. For all of us here at the TD Ameritrade Network, have a great day and a great afternoon. Next Gen Investing is coming up next.
Next Jenny Investing. On its way. Man, it's been a long time since my computer's been laggy. That is crazy how spoiled I am. So blessed. I've had a nice computer all these years. Had to wait on it. Probably wants me to update. Thanks, Ronald. I believe those were unscripted words from you. So refreshing. Shares of major U.S. banks fall FDIC reports bank deposits fell at a record pace in Q1. U.S. auto safety regulators want to mandate automatic emergency braking in future vehicles. Typical home has a monthly mortgage cost that's about 25% more than rent, according to Redfin. 25% more than rent. Costs an average of $20,813 per year to raise a single child in the U.S. Fed Fund futures, 66% probability of a 25 basis point rate hike in June. BlackRock CEO says Fed is not finished. 2 to 4 more tightenings, probably closer to 2. Says says a recession is likely to be modest if we even have one. It doesn't see evidence of reduction in inflation or evidence of a hard landing. I guess he was talking earlier. Economy, there will be pockets of problems like commercial real estate. He believes there will be a U.S. debt ceiling resolution. Says the United States is jeopardizing its reserve currency status with U.S. debt ceiling drama. Euro extends losses touching lowest level since March 20th. Drama. Barcoding.
They've become increasingly positive on this stock because of its huge AI draw as well. They're expecting an adjusted earnings of 50 cents a share on revenue of $677.3 billion, $3 million. And when it comes to share price action, this stock barely moved from last year this time, but year to date, it's up more than 50%.
No, it was just a bunch of AMC apes talking about their community and corruption in the stock market and how they can't believe how they just talked about a lot of corruption and their group and their community that they've built and how there's so many people that hate on them and that there should be division between GME and AMC.
expectations specifically. And also, the company has
Pulse, like,
margin potential. This is according to Wedbush.
what's that, guys? I'm a billionaire.
Restrict any of the downside risk that the company has. This also from Wedbush Securities. So a few other analysts might have something to say about this stock, but certainly after it reports, we'll hear more.
Yeah, one of the things that stuck out to me was this thought that the customer growth aspect might be really high still, might be over 30%, but the size of the deals that this company is making may be smaller just because companies aren't necessarily as comfortable right now given the uncertainty to lock into those super long-term contracts, and generally things have been kept a little bit tighter to the vest and a little bit shorter term. So that'll be a trend that I'll be watching to see if that actually shows up in the numbers for CrowdStrike. But you know, in a more broader conversation, Renita, you talked about its move into this generative AI and how it's going to potentially provide efficiencies. I think we got to start asking ourselves if this.
Thanks, Keenan. Appreciate it, man.
Here a little bit in terms of the AI. You know, all of these companies are doing it, but they're also doing it as they've seen what it's done for some of their peers. I think we can separate NVIDIA being sort of the arms dealer in this arms race from some of these players that are working on the research, and all of them are going to have different levels of success within their endeavors within AI, but also it's going to have a different, not symmetrical impact on each business. So CrowdStrike may be one of these winners. It may not. It's too early to say that, but all of these stocks are trading as if, you know, the thought of, dipping your toes in the AI R&D
I like that one. Cool.
Bucket is just worth 50% increase.
Simulators.
So
Activate Pulte to confuse AMC apes on DRS.
Kind of call a spade and wonder how much of this is
Activate Pulte to confuse AMC apes on DRS.
Good thing about this is we're going to find out when we hear from them later on this afternoon. This is very much a name that is in the mix in my mind because of those ties to AI, because of the ties to cybersecurity in the tech world, very much a next generation name. And so for that reason, I'll say upvote. Next one is a name that has also had its fair shares of ups and downs, a lot more downs recently though, and that is Nordstrom, JWN, a stock that has had really a rough go at it for the better part of the last half decade. Talks of taking it private at times had buoyed it, but for the most part, it's been a pretty brutal move lower.
It's true. So here's the deal. Typically, analysts are saying that the higher end retailers are somewhat insulated from some of the issues that hit retailers that are contingent upon lower income customers, right? They feel like the customers of the high-end retailers are able to still buy those things even in a possible downturn. But since around March, they've been seeing this trend flip, and they saw a softer sales figure come in over that past quarter, really over the past few quarters when we talk about it, right? And so right now for Nordstrom, analysts are expecting a loss of 12 cents a share on $3.11 billion.
Let's beat those expectations.
Sales are expected to fall by 12.5%. That's down from a rise year over year of 17%. Quite a difference, right? Citigroup says that even the credit card data is supporting these estimates so far. Credit card data and lower foot traffic is starting to make them feel like consumer sentiment is beginning to wane a little bit, and that could lead to softer revenues going forward at least. Alex.
This is one that I think if you got an opinion on it, all the power to you. I think this is an important name to give us some context into how the consumer's faring and what kind of things are being purchased. But the stock itself has had longer term issues than just a downturn in the economy this year. So for those reasons, I'm going to say downvote, but it's certainly one that I'll have on my list of things to monitor after the close. Like I said before we got into this segment, I really don't think there's a right or a wrong answer. It's just kind of finding ones that fit together and can be interesting to explore. This has been a company that has had a lot of comebacks being called for, and it's failed to deliver on that. And so we'll see if today can be a turning point for the company, or it'll be more of the same. Next one on the list is NTAP. This is NetApp, of course. Another name under a little bit of pressure here today, but has been it's doing its best, I could say, to get up off the mat here in 2023. I mean, this is deja vu when you talk about many of these names that are tied to cloud in the tech world. You know, they had really big run-ups post-pandemic, and they've given a lot of that back, and they're having varying degrees of success bouncing back from a lot of the selling last year. This one's sort of middle of the range.
Yep, you can absolutely see that with the chart that we have up right now, the 1-year chart. It's certainly been a volatile stock to follow through. And that's why analysts are expecting it to report lower fourth quarter earnings. They're looking for it to be down the year ago earnings. A year ago, the company made
All right, climbing up a little more. I might take the short here. It rejects VWAP again.
To come in at $1.35 a share on revenue of $1.54 billion. And these estimates, of course, they're from a broad range of analysts, but they've been also cutting their price targets on this stock since the beginning of the year. Some of the most recent ones actually took place, or the biggest cluster, I should say, took place a couple of months ago. Bank of America downgrading the stock to an underperform from a neutral, cutting the price target to $58 from $70 a share. Then it also saw downgrades from Loop Capital, UBS, and a few others. Something else I'll be watching is look out for any update on any dividend announcement that the company may make for this stock, whether or not they may choose to halt anything or if they'll boost it. We saw an interesting trend during the top of this quarterly results of some companies, although they might have had a loss during the quarter, they chose to boost their quarterly dividend in some way and try to put in a little bit of a preemptive, excitement about the stock ahead of earnings, perhaps a couple of days before. We haven't heard anything yet on anything of this matter for this company, but we'll look out for any updates during the earnings call.
Yeah, those are good things to call out. I'm going to say downvote, but it's not necessarily a reflection of NetApp itself, but more a reflection of the next one here on our list, and that's Okta. I see sort of this business that Okta operates in, which is like the identity solutions, verifying who's logging into things. Is sort of adjacent to what CrowdStrike's doing. So I think there's a natural theme there in kind of security and making sure what we're doing on the web and on computers is done so in a safe way. And so building out a little bit of a cybersecurity adjacent theme here today in Okta, but this is just another name that has earnings this afternoon. So a little bit of something for everybody today, Renita.
There, a little bit. So analysts are kind of split on what they feel like Okta will do. They're expecting an adjusted earnings of 12 cents a share on revenue of a little bit over $510 million. Now, most recently, Morgan Stanley had said that Okta is showing signs of stabilization in the first quarter, which is a good thing because this stock has been pretty volatile over the past couple of years, but they feel like it can do better than management's original guidance of 19% in a key metric. That key metric is the growth in current remaining performance obligations during the quarter. They're expecting the company to actually be a 19.5% increase, and that's also versus the 17% increase that the street had expected for the company. So while they're expecting this higher thing going, you also have some analysts who are more cautious on this stock. Now, up to date, year to date, I should say, this stock has been a little bit higher. Some analysts feel like it can go higher. In fact, it's been more than 30% higher year to date. Analysts feel like it can go higher, like Wedbush, who reiterated and outperformed, but they maintain.
I'm sure they are theorizing that, Cameron.
As you can see now, it's trading just over $90. They chose not to raise it. However, RBC recently boosted its price target on Okta to $110 a share from $100 and maintained an outperform rating. So there are some analysts who feel like this stock may actually go down. One more thing as well, Morgan Stanley chose to reiterate its equal weight rating and leave that price target stock or that price target for the stock at $84 a share. That's below where it's trading right now. So that sort of gives you an idea of what the expectations are.
It certainly does. A lot of the same things that we talked about with CrowdStrike, I think, apply here. Shorter duration contracts being signed, but also Okta's faced some pressure actually getting those new customer acquisitions lately and getting new additions into their software. So we'll see if that's still a continuing trend that'll weigh on this particular security. But a reminder, of course, our two upvotes, CrowdStrike, Okta, both operating in sort of securing the web and operations on computers. So there'll be a bit of a theme here for us today within that security world. We're going to take a short break. We get back. It is time for the Chart Master. We'll look at the charts. We'll do
Chart
some trades.
Master.
CrowdStrike, Okta. We'll be right back.
Oh yeah, Okta. That's what I'm looking at. This show is the only place I've heard that. Things had a crazy move. Earnings after hours on Okta. GME had a bounce there off of 24. Back up to VWAP. It's going, it's down 1.3 still. Fiber coating. I can't see any link, but on our Discord. I might want to break out here, we'll see. Yeah, kind of made a little cup and handle on the 5-minute. Or on the 1-minute, little cup handle. If he gets the breakout, rejection. He's in with your business? Yeah, look pretty solid. Oh, chart looks nice. Got earnings tomorrow. I mean, your TD talking about it. We do about $500 million revenue a quarter. Losing money though, but not bad. Not too familiar with this company at all. Oh, cloud-based identity solution. Thanks, Cameron. All right, I'm in. Enterprise Identity Management. Oh, one login for all things. Nice. My name in there in the Zoom meeting is Ryan Cohen. I'm just kidding. I didn't put that as my name. Got 20 GME calls, 2040 and a half. Weeklies? Got them for Friday? Yeah, I'm still green on my calls, which is nice and kind of surprising, I guess, because they're out of the money. But haven't sold off a whole lot today. Weeklies. All right, expecting the SPY to break out here, I guess. Good. Oh, barbecue above VWAP with some volume. Yeah, it still could be a little cup and handle on the 1 minute. And you kind of see it on the 5 minute too. A little cup, handle. Need to break that. I'll go long if we break VWAP. I'll do it. Gosh, the laggy browser is really throwing me off. As I'll trade on my phone. Barbecue might be about to wake up too.
means only $600 in total risk on this particular trade, with a $900 max profit. Now that $900 max profit is not something that is captured frequently or even relatively commonly. It's
I'd see your spike or two. I don't know. Yeah, I mean, we didn't see anything last time.
But it is a max possible
But
profit potential.
I like the idea that that's even a possibility, since it seems like OTC is dictated more by supply and demand, and retail's orders are potentially going to the actually cause price appreciation.
Move one way or another. For example, a trader may look to then buy this back if they could for less tomorrow. $6, $7 would be a huge win, as it would be able to lock in those $2, $3 worth of option premium locked in ahead of time. So that's typically how this one would be approached. It's very difficult for this not to have at least one option in the money, so there is kind of that added expiration risk around assignment and exercise, so it does take a little bit more attention. But it's a neutral strategy, has varying degrees of success based off how precisely or the lack of the movement associated with this trade. It is truly neutral though, 81 break even, 99 break even. And the closer it can be the 90, the better this one can perform. It is risk defined though, Renita, so in the event that there is a massive move one way or another, you know the worst case going in.
And important to note that this was a neutral trade. Very great information. Thank you so much, Alex, and thank you for the information, our chart master. But
And Mullen calls are
we have
crushed.
And we'll look through a preview of C3AI's earnings. So stay tuned.
A lot of volume on Mullen.
On Next Gen Investing.
Chart totally broke down. There you go, SPY. Is it legit? Is it false? You see some volume to support it. Volume building there. Get a breakout here. Or move back up rather. I like it. Oh. I had the volume too, picking up. Oh. GME almost back to VWAP, 24.23, 1.4. I did move this trend line down a little bit because I was pretty high above this actual support on this channel. Now it covers that better. A little more realistic idea of the levels. Rival just couldn't do the breakout. Couldn't manage. There goes SPY. All right, let's get that gap fill. Do it. Do it.
since the December lows, and they were one of the first ones to announce cost-cutting measures, especially layoffs, which the street has heavily rewarded the stock for. Now, obviously, this is a software as a service business, so we're going to see the impacts of enterprise spending over the quarter. If we do see a little bit of a slowdown, especially on the software side of the business, that could definitely impact the bottom line.
Shut up. This is a joke, right? Yeah, this is fake. It's like, what the heck? That's funny. I like this one. Thought that was real. It had me. I didn't believe it. Bolt, short destroyer. After much consideration, came to the conclusion that GME is the only play. Talk is cheaper, takes money to buy whiskey. Oh, I stepped in poo. See, these are great.
Once we are seeing this move to the upside from those December lows, it's a little bit harder to continue this trajectory.
Hey trader, what's up, man?
Probably would see a little bit of a resistance point right at the level that it's trading at right now before.
It's moving up. We played the break.
They also have their customer 362.
It's consolidating, so it's looking good. Double bottomed on that 2340 level, and it's just been barcoding on VWAP. So still making maybe a cup is what I'm kind of looking for. Some flattening of the price action. See if today holds this level, that'd be pretty big. Give you more confirmation to the buy on the 2350 range.
In a huge way. As a matter of fact, I think it was Wedbush Securities and a couple
yeah.
of other analysts who
barber coding today for sure. Oh, someone called barber coding. Yep, that's good though. Consolidation, decreased volume, consolidating, just hanging out above a support level. You like it.
Hang their hats on during this earnings call.
This is when we accumulate. Boring.
Time that they transition from the cost-cutting measures and then start focusing on the core products that they're trying to offer and the reasons why they're spending the investment and the time and the energy in order to build out these products and why they have not been cut. I think that's been an area of this business that has been lacking over the last 2 to 3 years. It's been a laggard when you look at the Dow Jones Industrial Average as well as the S&P 500, but now it's starting to gain some traction. But one thing to just note, Renita, when you do cost-cutting measures, especially laying off employees, that's good for the near term, but for the long term, it does hinder growth. And so how are they going to continue that growth catalyst? It's either going to be by technology and product offerings that they're going to be able to revolutionize, or they're going to have to add on staff at a later time. And I think if they can just show the products that they're going to offer, the return on investment, I think the street might be a little bit favorable for them. I'm not sure how much the AI conversation is going to have a major impact when it comes to Salesforce, but we have been surprised by other companies announcing new ways to get in the AI space as of late.
Right. We saw more than 100 of the S&P 500 companies mention AI at some point in their earnings call between March and last Friday. But we'll leave it there. Kevin Green, Senior Markets Correspondent, thank you so much for joining us. Let's bring back in Alex Coffey for today's FOMO conversation. And we're looking at C3 AI.
Yeah, this is a tough one, Renita, because it is front and center. It is the eye of the storm, if you will, in terms of this AI hype, and it's got AI as a stock ticker, for example. I mean, you can't think of something that is more kind of perceived as just pure speculation on this type of technology and what it may mean, of which that's mostly been a positive so far this year. Not so much today and in the second half of yesterday. As I said, I get the feeling that we saw a little bit of the air let out of the sails, if you will. I'm not going to say the bubble was outright popped. I'm not even necessarily going to call it a bubble altogether, but it certainly had some frothy action taking place the last few weeks. And this isn't exclusive to AI. You can make the same argument for any of these names that have exposure to this space, from NVIDIA to AMD to Microsoft and down the list. Of which AI, though, is the purest of plays. It's in the name, it's in the stock ticker, and this stock has since turned down a little bit over the last session. It's down 10%. We haven't even heard the earnings yet. But all that being said, Renita, there are no earnings. This is a total hype trade, and so when you start talking about AI, I don't even know how you start to value it.
I don't know, honestly. So definitely letting some of the wind out of the AI sails today, right? And the company, remember a couple of weeks ago, it actually upgraded its guidance, and it's, I believe, based off of such excitement around the AI trade. Fair fair enough that the company itself had been introducing more AI products, fair enough that it's been making other partnerships, and even fair enough that the company says that it's really been in this game for closer to 2 decades than what some other companies have said. But will this stand up? You're absolutely right, because with the stock trading at the highs that it has been at, will it be able to sustain this? I mean, year to date, this stock is up over 240%. Will it be able to sustain those kinds of levels? Who knows? But we'll just have to continue to see what they truly have to talk about and to deliver on in earnings, because up until this point, just as you say, it's been a lot of hype. However, the company is expecting to have an adjusted loss of 17 cents. That's what analysts expect the company to have on revenue of $72.3 million. That's not too far from the company's own expectations for itself. It sees revenue of between $72.1 million and $72.4 million, and a non-GAAP loss from operations at $23.7 million to up to $23.9 million, looking at a non-GAAP loss of 17 cents a share as well from the company. And so the company still had this boost in somewhat of some of the expectations, though, because of the AI boom. They say the overall business environment for AI has significantly improved this year alone, and it's been better than it's ever been with the company, unsurprisingly, because there's been such excitement happening within AI, Alex.
There's a lot of speculation involved in this one. For example, if you look at this Friday's expiration, the options cycle, 384% implied volatility. So, you know, you can do the math there. That's a lot. And so, for context, the volatility on the overall market right now is 17.5%. So it's a crazy, crazy multiple of that. And for good reason. This is a very speculative asset right now. This is a very speculative company. It's right in the heart of the hype and the kind of where the trend is right now, which is in AI. And there's a little bit of a wobbly trade in that the last 2 sessions, both in sort of the key pieces, things like NVIDIA as well as AI itself, down 9.5%. But this hype is here for a reason, right? There's been a lot of optimistic things that have happened for this space this year. And those seemingly really came to a crescendo post NVIDIA's earnings. So you can understand the hype. I don't think there's a huge fear of missing out right now to the downside. For those who have been betting against these names, they've likely been doing that for longer than just the last couple sessions, unless they perfectly timed this turnaround. So I still think the fear of missing out, Renita, when you start thinking about from like a sentiment standpoint, is largely to the upside. It's largely bullish on a name like this. It's acted as a meme stock in the past. It's had meme-like activities recently as well, but certainly tied to the AI trend. So I looked at a strategy that would benefit from an upside move, but doesn't necessarily need it. It's rather just hoping it doesn't go down, hoping it can maintain its value. All this hype that's around AI right now and C3 AI itself, is it able to deliver a message that's just enough? And that's what this trade's looking for. So rather than asking for something to happen or speculating on where the rally might go if there is one, I thought it was prudent to just consider a more pragmatic approach of, if I like this stock, why don't I just find a way to capitalize on it if it just doesn't go down? And even if it does go down, it's risk defined. And so we went out to this Friday's expiration, selling that 385% implied volatility by selling a 34.31 put vertical. If you're able to collect $1 on this, that'd be 1/3 the width of the strikes. Creates a 2-to-1 risk-reward ratio where you're risking 200 to make 100, not accounting for the fees associated with the trade. The break even, you simply subtract that $1 from the 34 short put, you get to 33. So stay above 33, this one has a chance to potentially make money. Stay above 34, it has a chance to entirely expire worthless, which is the best case scenario when you're selling a put vertical. So this is a strategy that is, again, I just want to emphasize it because I think it's a key distinction. It's neutral to bullish, but really it's just saying hold on to your value at the very least, don't go lower, and if you do go lower, stop before 34. So a little bit higher probability. It's risk defined the event that there is some sort of catastrophic collapse, but certainly not buying the high here at the stock down 10%, Renita.
Good to note, and I should note that this company has been doing what it does for over a decade, not over 2 decades. However, coming up, we're going to preview PVH. It's the owner of Tommy Hilfiger and Calvin Klein, so stay tuned to Next Gen Investing.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our portfolio management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience that pushes you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Oh, yeah, I'm going to take off.
Now, you downloaded the TD Ameritrade mobile app?
Yeah, actually, I'm taking one last look at my dashboard before we board.
And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set.
Choose the app that fits your investing style.
You guys want me to turn up the show?
And now it is time
Sure.
to go to the area of the market that you said you had a little bit more of a focus on, and that is, of course, the retail market. We briefly mentioned Nordstrom's at the top, as you kind of teased before.
So laggy.
We're going to be talking PVH, parent company of some pretty familiar brands, I think.
Right, Calvin Klein, Tommy Hilfiger. We're going to look and see how these companies did. But there's been sort of a divergence.
Oh, sorry, this is down from that in Twitter Spaces. That's why.
Middle ground retailers, and then the retailers who are discount. But to give us more details, we'll bring in Caroline Woods. She's live from the New York Stock Exchange. Caroline, tell us what you're spotting for PVH ahead of its earnings.
Hey there, Renita. Yes,
there we go. That should be good.
Winding down, but still a few retailers or
Spy Bippity Bip Bip
set to report, including PVH, and of course we also have Macy's, Lululemon, Dollar General on tap. But
Bolt soon confirms he's stalking horse bidder. Confirmed.
Almost 3% ahead of this report after the closing bell today, but this is a stock that's actually performed quite well this year. It's up about 22.5% year to date, so definitely seeing some strong 2023 gains, just under pressure.
We could have news today during this bankruptcy hearing we're about to listen to.
It's only about 8.5% away from its 52-week highs. They did say they were coming into 2023 with strong momentum and expectations to continue to grow the top line, to grow revenues. So let's talk about estimates. As you can see here, analysts looking for adjusted EPS of $1.93. That's about a penny lower than last year's same period. Meanwhile, revenue is expected to grow slightly to $2.13 billion. That's a little bit higher than the year ago's $2.12 billion. Inventories are going to be key here because in the prior quarter, those increased by 34% due to higher product costs. So we'll see what the inventory situation is looking like. Also, just how they're dealing with macro headwinds, especially in the United States and Europe, where we know they continue to pressure. We'll also see what they have to say about the recovery in China. We know that's been uneven and sort of mixed. So we'll see if it's benefiting PVH or hurting it, or not benefiting it as much as expected.
Did get this gap fill on Best Buy.
For any updates to the full year outlook, back in
Building a nice cup here though.
Full year EPS of about $10 per share. Also expecting full year revenues to grow 3 to 4% on a constant currency basis, and operating margins of about 10%. So if there's a beat in the reporting period, we'll see if they boost that outlook at all, or of course if they slash it at all.
I will say, back on the last earnings call, they said, while we expect the macro environment will continue to be volatile in 2023, we are continuing to focus on executing our strategies to drive top-line growth, improve profitability, and strong double-digit EPS growth in 2023. So
It stopped me out. Are you kidding me? That wick to VWAP stopped me out. Dang it, I thought I had open positions right now. Bugger. It barely hit my stop.
Caroline, I'll also be looking to see how well the company
Oh
is
my
managing
gosh,
its
that
expenses.
sucks.
I see analysts expect
I walked away from my computer.
to be at $1.18 billion. So we'll definitely keep an eye
The
on
stop
that
on, I walked
everything
away.
else you just shared with us. Thank you so much
Well,
for bringing us PVH and the expectations for earnings. Now, let's bring back in Alex for
that volatility, man.
segment, which will be under 30.
Yeah, we'll take a short break. We get back. We're going to talk one of the companies that I've argued has some of the best customer service in the business. That is Chewy, but it hasn't been enough
Big
over
rejections.
the years for this company to continue to
Bathroom
the
breaks for you, no?
post-COVID boom that it saw. We'll get George
You're William Pulte? Nice, I'm Ryan Cohen. I'll see you in there, buddy. Bathroom breaks indeed, man. I probably wouldn't have had to stop if I was here, because it was in case something like that happens. I was far enough away, I'm fine with this breakout. Not to say I would have timed the top perfect, but dang. I don't even know, that was literally... That's literally me right here. I'm looking over, where's my positions? No, tell me. Go on. Big names in the virtual room for sure. Fiber coating still. GME moved back up to VWAP. Yeah, I was waiting for that break all day. Dang.
But for those who are not, it's an online pet store essentially.
Right, online pet store got a lot more play during the pandemic because a lot of people adopted more pets during the pandemic, didn't want to go out to the stores. So they got the subscriptions at Chewy so that they could feed their dog or cat or other animal in the house, or pet child is what some folks call it. But to find out a little bit more about the earnings expectations, let's bring in George Tillis, our senior markets correspondent, who will give us a view. Are we looking at a loss for this stock for this earnings season, George?
Yeah, we are, Renita. If you look at the adjusted earnings for the quarter, as they're going to be reporting soon, they're expecting a 3-cent loss. Now that's compared to a 4-cent profit last year. And of course, last quarter they generated, it looks like 16 cents on an adjusted basis. So sequentially, they're expecting losses also year over year. But one of the things about Chewy, I think, is they actually have expended quite a bit of money in the last year or so. And I think some stock-based compensation has caused higher SG&A expenses, and that's why we're expecting to see the loss. But nonetheless, if you look at the sales for Chewy, they're expecting about 12% increase year over year at 2.73 billion versus 2.43. I think if you look at the business overall, gross margins have actually expanded over the last 5 years. This is a good thing. I think people are still, again, willing and able to make purchases for their pets. And it's not just product, it's actually service, things like pet insurance, vet and telehealth services. This is another area that Chewy is actually going into, and I think that's one of the reasons why they're expecting a loss for the quarter, because they expended quite a bit of money to expand their telehealth services. But if you look at the average revenue per user, in other words, how much is generated for those subscribers, it's actually been growing. And I think alongside higher prices with higher gross margins, the company is actually getting very close to being more consistently profitable. If you look at last year, with a 28% gross margins, they did
handle right now.
1%. So it is growing. I think if you look at its sales, it's expecting to be in the low double digits. I think that's still healthy and robust for an e-commerce business in this environment. But I think if you consider a couple of things that will be looked at by the analysts, and I think a couple of points to be focused on when they report earnings is how much average dollars being spent per user, and the number of total users exceeds over 20 million right now. And these are, again, regular monthly active users.
On that
yeah, George, I'm going to hop in and ask a question here real quick. Actually, I'm going to set up some stuff I want your thoughts on, because I think that this is a really, really interesting company. And one of the things, George, when we're considering this one, is all the things that it's watched other successful companies do, and then it's mimicked. It's obviously watched Amazon really work on making sure it gets its packages quick and the branding that it has on the boxes. It's watched the cloud services and things like Adobe, and the move towards subscription.
Awful
that model has been really beneficial.
It's the lag.
Doing that with its auto ship. But what's always stuck out to me is that it knows it's going toe-to-toe against a company like Amazon. It knows that it's going against some of the toughest companies out there, and it's tried to differentiate itself through things like really, really strong customer service. I get a handwritten letter every year for my dog's birthday, and one of the quarters previously I read that they have like 20 million active customers. That's a lot of handwritten letters, George, and it hasn't been enough to keep this stock at some of the post-pandemic heights. But as you said, it's made a lot of moves into higher margin businesses.
A lot of handwritten letters.
A more holistic pet service company as well as store.
Yeah.
How do we look at this one now going forward? Because it's really hard to put your hand over the last few years and not look at how far it's come down.
So I'm indifferent on the stock right now.
Go to text channels,
I can't say what will happen post earnings, but I do see your point, Alex. I mean, all those things like handwritten letters are expensive. I think that's one of the things that has been encumbering
Great chat, general, crypto, trades, media, DD.
Sales growth, again, if you look at it 5 years ago, year over year, it was 40%. Now it's 12% based on this quarter. So they are seeing a deceleration in sales, which is fine if your company is growing its earnings. Now, if you look at the earnings for Chewy, they're expecting 48 cents for the full year. And again, relative to the existing price, it's about 68 times forward earnings. And if you also look at from a price to free cash flow basis, it's trading at 32 times. So it's still a little bit expensive, is what I'm trying to say here. But look, people are very loyal to brands, and they're loyal to not only the convenience, but the value component of businesses, but also the feel-good elements of the products they actually purchase. Chewy still has that. And I think if they expand their insurance services, their pet veterinary telehealth services, things of that capacity, those are bolt-on services that, again, are very accretive to the bottom line. So I can't say what will happen after earnings, but it's starting to look a little interesting, assuming they do increase their earnings estimates for the full year. We may end up seeing a nice move, but you have to keep in mind that it's still trading at a lofty valuation, and that might be one of the things that presses the price further to the downside.
George, one of the things this company's been doing is trying to, of course, cut costs, but in one way by having these automated facilities, right? What have you heard about the automated facilities? Have you heard any mentions of AI and if that'll be included in automated facilities for the company? I don't know, but maybe.
Well, I don't know about this company, but I can tell you right now that industrial automation and artificial intelligence has been a huge theme in the last year. And I've talked about it with Oliver in many segments where industrial automation-based companies have performed extremely well. I think that the entire secular story behind that is going to play out over time. I can't say if Chewy has implemented that. I don't know, to be honest with you. But nonetheless, anything that helps optimize efficiency and improves their scalability attributes is going to help the bottom line for this business.
Hey, no doubt, and if they've been paying attention, they're going to find a way to at least talk about AI, even if it has nothing to do with their business, because that's worked, quite frankly. But I'm really going to be interested, to your point, too, on just the average ticket sizes. We'll see how much money people are spending. Are we just buying the essentials? Are we just buying
so the handle formed.
the food?
See if you get a break out of it now.
Because maybe you live in an urban environment. Are you buying that toy on the checkout as well, that extra discretionary purchase that Chewy really badly wants to sell? But George, great stuff as always. Looking forward to this earnings announcement as well as all the others that we talked about throughout the show. Thanks to Renita for sticking around here for this full hour. Coming up next, we got Nicole Petalides and the Watch List. We'll see you tomorrow.
You see this break here. Looking good though, kind of bull flagging or a cup and a handle. Yeah, we've got the Zoom meeting in 30 minutes. GME 24.21 just below VWAP. Our coding still there, 25 cents. Feds, Jefferson. Oh yeah, Jefferson was speaking today, I forgot. He says holding rates steady in June doesn't mean hikes are done. Skipping rate hike could allow more time to assess economy. Eyes moving up there. U.S. short-term interest rate traders trim bets on further Fed policy tightening after Jefferson's remarks. Fed June rate hike now seen as a 1 in 3 chance based on Fed funds futures, down from 67% chance seen before Fed's Jefferson's remarks. That was part of that push probably in the market. Trade the TA or just trade the Fed speakers? Fed Harker said, I'm in a camp coming into this meeting that we can skip a meeting. It would be a skip, not a pause. The Fed doesn't have to hike at every meeting. Bill Ackman has just said Jamie Dimon should run for president and beat Biden, who is in cognitive decline. Jamie Dimon run for president? Ah, War Chest picking up some IAP. Nice.
Now what are you watching? Because AI
Stupid
was
president.
hot, then not. What's going on?
Several different AI stories are taking place right now, Nicole. We are seeing the stocks right now, or the Philly, or the semiconductor index, down about 1.6% in the session here today, and it's really getting kicked off because of moves in Nvidia as well as C3 AI and Ambarella, and we'll talk about that one first. First and foremost, we are seeing Ambarella down about 14%. They missed both on the top and bottom line. Their revenue actually came in down over 31% year over year, and they're continuing to see cyclical headwinds in their business, which is also showing up in their financial results. But they did call out their AI strategy continues to grow. They're working on research and development opportunities in order to double down on their AI
this
platform.
lag, man.
Hopefully they can actually expand that and gain some market share there. So overall, they also did actually reduce their forecast both on the top line as well as their gross margins, which is why we are seeing that stock pull back. We are also seeing C3 AI, ticker symbol AI. That stock is actually down right now at around 10%, if you will. And the reason why we are actually seeing that is just a little bit of a pullback, some profit taking. We saw this huge run up to the upside here when it came to these AI names, and we actually have C3 AI reporting earnings later today. It's highly anticipated. There's an implied move of about 24.5% to the upside or downside.
Yeah, it's
so
crazy.
We'll have those earnings announcements, later in the market on close segment here. And last but not least, we actually had Nvidia. Nvidia seeing that huge run up. It is getting a little bit of profit taking today, down about 3.5% in the session, and it's not surprising. Once again, we had a lot of this FOMO activity in the semiconductor space and all of this growth around data center and AI, and we are seeing a little bit of profit taking. We also have to keep in mind, Nicole, it's the end of the month, like you said, and we do have rebalancing going on for a lot of active managed funds that may not be able to have this much exposure to the tech side of the business.
Yeah, today is the MSCI rebalance.
I come down a little bit here.
I said yesterday, I don't know why I said that, but today is the day. So here at the closing bell, we're expecting significant volume. I mean, I won't say double.
That's a good point. Some rebalancing for the end of the month.
Close with this rebalance, the MSCI rebalance in particular, and the funds and things that you said. Let's turn our attention over to SoFi Technologies. What's up with that one and the House vote deal? That's sort of going together.
Yeah, so finally, it looks like we are going to have a start date when interest is going to accrue on student loan debt. And this is why we are seeing the stock pop to the upside here. Now, student loan origination actually was the first product that SoFi offered in the marketplace. And so that's what they've been known for. But
back
since
up 10.2%.
the pandemic, they've actually transitioned their business a little bit to focus more on retail banking as well as some of the other lending products. Now, this new package, if it does get passed today, I think the vote is at 8 p.m. p.m. Eastern time tonight. If it does get passed, then interest will start accruing at the end of August, and that could be a potential windfall when it comes to SoFi. But there's also the question, Nicole, what is the impact going to be on the consumer themselves? They have not been paying, potentially, down this interest and paying down the principal on their student loans. That could have a marginal impact on their spending and could be reflected in some of the companies that report earnings in the next quarter coming up here. So a huge move to the upside. Let's see if it's going to be a windfall for them. We probably will not see that being
Little cup and handle on the 1 minute.
1 or 2 quarters on their
Up
income
handle.
statement, but a very interesting move.
The larger one.
Least. And finally, I mean, they've been able to transition their business. This might be another side of the business that they could either try to sell off, or maybe they want to enhance it and grow it again.
Okay, thank you for all of that. A good look at some really important topics and how intertwined they are. Thank you, Kevin Green. Good to see you. Thanks. All right, let's take a look at the bigger picture.
That beige book just came out.
Officer at Cap Wealth. So what's going on in the equity market? There are a lot of folks who think that we're at 9-month highs, the rally can't last. Where do you stand?
Oh, I think the market's very frothy. In fact, I was looking at a statistic earlier. 96% of the return
is a bad idea.
105 stocks now, and so when you see,
I mean,
that
that would be pretty straightforward with
concentration in leadership,
with the market cap of it right now.
As you go
your risk for reward is awful as a short.
And that's really something I was talking about earlier, because
versus the long side.
I mean, you have 5 stocks, and it's really tech that has been leading the way. I mean, when you
There you go, Spy. You're ready to do it. Ready to fill that gap.
You see these tech names at new highs, names like Nvidia and Apple, and they're doing so well. But when you look at the Dow, industrials, or you look at the Dow Jones Transportation Average, even worse, you see.
Dang, I missed out on nice profits for this rip. For VWAP.
There's weakness, right?
There's weakness. I thought today there's a really good sign, I think, in Intel. And
yeah, we're in the meeting. Ryan Cohen is in the Zoom meeting.
Pullback in AI.
It's in 20 minutes. We'll be listening in. Investor Place said everyone should be shorting at this price. Heck. Oh, that's my name on it. That was a joke, Cameron. Of course, RZ is not in the meeting. I've been saying I put my name as Ryan Cohen on the Zoom meeting. Okay. Oh, Macron didn't get fooled. He's not even in GME meetings. He's the chairman. I mean, some random bankruptcy meeting for barbecue. William Polte's in there too. Pulte. Just wait till you see the roster list on the Zoom meeting. It's gonna be Ryan Cohen, William Pulte. I bet Donald Trump's in there. We probably have Elon Musk. I know one of you guys is Dead Cat Bounce. Knew it. Thousand Cloud figured it out first. Yeah, Carl Icahn I'm sure is in there. There's probably gonna be like 5 Ryan Cohens, 3 Carl Icahns, 2 Bill Pults, 3 William Pultes, couple of AMC apes.
Still a topic, right? You have a vote tonight.
I didn't actually put Ryan Cohen.
I mean, there's always the wild card. Because I've read reports that the market
I don't want them to track my IP and do something weird.
They figured it goes through, and now they're looking at other hurdles.
I thought about it.
I I think it'll pass. Patrick McHenry, chairman of the House Banking Committee, put some good.
I think one of you guys is William Bolte, though.
Both sides, there's something of the
Multiverse merger in the bankruptcy hearing.
It's not really a win for either side. The rest of it now has to be played out through the political process and the election cycle we're getting ready to enter into. They've got a 2-year, window to before they have to address.
Oh, did I not link it?
And so
it's pinned in the chat. That pinned message that you closed out of.
Assuming that they pass this tonight,
right there.
Then we'll move on to the political cycle.
We're gonna listen to it on here, but yeah, if you want to try and tune in yourself, the link is, I'll put it under media. We could put it in general. It's not the place for that.
25 basis points each. Which camp are you in, and what kind of companies do you pick right now as far as strategy for investment?
All right, cup and handle is breaking out.
Well, I take the Fed at
if
their
we get
word. Meister,
get a high of the day or gap fill or we got going on.
Said, look, there's no data that supports pausing and that we should go ahead and increase rates. I think it's easier to pick the companies you want to avoid than the companies you want to buy, as long as the Fed continues in this tightening cycle, as we think they will. So you want to avoid companies that are going to have to access the capital markets, that have poor balance sheets and don't have established recurring streams of earnings. So, that's the cautionary tale. I'd avoid commercial real estate and any of the, like I said, the pockets of the market where they're going to be dependent on refinancing and access to the capital markets over the next couple of years.
Mm-hmm. And where does a name like Berkshire Hathaway fit in the picture? Why is this one a winner in your mind?
They're just in the driver's seat. They've got over $125 billion in cash by being patient with their balance sheet. They've gone from having $50 million worth of earnings on that $125 billion.
A little bit of an RSI divergence there. I don't like that.
$1 billion. It's the same balance sheet.
Put a
it's
stop
just
in.
Picked up $7 billion worth of operating earnings. They can buy a lot of companies with that cash and just the increase.
I don't think you're getting Jenny today's
now on their idle reserves.
Right, understood. And then you had a few other names, a name like Chevron.
Yeah, I think Chevron is just extremely well run, great dividend play. We believe that the demand for oil is not going away, and that the price of oil will be stable to moving upward, and that's a great environment for a company like Chevron.
Maybe you guys will summon her from her home office.
Right. And last but not least, you also
She'll
have
pop on.
here saying that it's
14.5, breaking out there a bit.
CBS is great dividend.
IP almost
they
green.
Have just been pummeled. It's one of those companies that has
me
not
above
done
VWAP
well this year, but given its valuation and the opportunities
Redfin up 5%. Look at that thing go.
Health acquisition, they're positioned to make a big difference, I believe, in the healthcare debate and innovation.
Equest still down 4. I'm not getting any more cash grid puts on this. I'm a little nervous about it.
While we're talking, I'm seeing some headlines about, whether or not the Fed.
Still, I'm trying to close wall still.
And you had the Philly Fed president Harker saying they were getting to a point where they really could sit and pause because of a few of the elements that were coming in pertaining to employment and inflation. We've already gotten the job openings. We saw a reversal there. There are now more job openings. We saw an increase after 3 months of declines. And when the interpretation of those declines, you could say, oh, every job is filled, or companies are not putting out jobs to be filled because they're worried, and now they are. Where do you think we stand in the jobs picture ahead of Friday?
Ahead of Friday, I think, hopefully we'll see some additional softening in the job market. We are in a very, very tight labor market. Most economists will tell you that the natural unemployment rate is somewhere closer to 4.5 to 5%.
Yeah, market's still moving. That's
and
good.
Because of that, it's still a job seekers environment. They still control a lot of the narrative on employment. So I don't see anything changing with that. That is going to be where inflation is really stubbornly resilient and difficult to move, because no one wants to take the unemployment rate up at the expense of the American people and some of the gains that they've made and still need to make, in wages and benefits.
Right. All right. Thank you for all of that. Tim Pagliara, great to see you, of Capwell. Thanks, Tim. All right, later this hour, we're going to take a closer look at the AI revolution. Long-term power, some investment strategies that you may want to consider. Also, let's talk about retirement planning and how legislation passed last year is giving more flexibility to investors. Our panel is covering cybersecurity. You have 4 key names in the space getting ready to report earnings. So we'll be looking at that. And up next, 2 tech names to have on your radar, the potential upside for Palo Alto Networks and Taiwan Semi. Coming up.
$15 minutes for this hearing. Oh, big fleshy candle there. Right on my line. Now maybe this is the top of the cup. A little premature.
Squeeze interest, so beware. Right now it's seeing volume more than double its 100-day average. And Apple touching 52-week highs. Investors watch the potential there in the AI space. Investment note, Wedbush's Dan Ives says Apple's upcoming Worldwide Developers Conference could be all
See if we get an engulfing candle here on the 5-minute.
how it can monetize on that. Company will also roll out new hardware and software during the conference. Twilio shares are higher after reports activist investor Legion Partners pushing for board changes and other divestitures. The information reports that Legion Partners is advocating the exploration and divestitures and other options, and Twilio shares are 38% higher for the year, still about 38%
this upward channel.
There. As you can see today, 10% higher today. So also, we're watching Advanced Auto Parts.
Yeah, I got in nice.
Company fell short of estimates.
Thanks to Cameron, he shared the link.
The auto parts store.
Well, thanks to any of you other guys.
72 cents. way short of the 256 people were expecting.
See another Pulte. There's gonna be like 5 Ranko and 3 Carl Icons, 6 William Bolts.
After several months of gains, it's down about 3.5%.
I think there's gonna be more than 20 people in here. Said you can only have 20 people. No, there's already like 7 of us in here.
Figured since it's end of May, we could give some end of the month stats there. Okay, for the bigger picture and some stocks to keep an eye on.
Nice, didn't make an engulfing candle.
Portfolio manager.
But we are at a resistance, so if it chops around up here, what happens?
When you see the market, we see the Dow, that's been selling off, but you're seeing the S&P 500, 4,200, right? What are you thinking?
Yeah, you have to think of the constituents within each, right? I mean, if you look at the performance of the S&P versus an equal weighted S&P,
take profits
you're
there.
seeing a big spread in performance, meaning the mega cap names, the top 5, are really leading the overall performance for the S&P. I believe it's the largest spread between equal weight versus the traditional S&P 500 that we've ever seen since the
jump back in on
back in 2003. So
we'd making like another handle.
You're seeing a big difference in performance of the constituents that are leading that performance between the Dow and the S&P.
Understood. So at this point now, we have a Fed meeting June 13, 14. There's the question of what the Fed may or may not do. You still have the debt ceiling, though, the markets seem to be looking more forward. Where are you feeling like the markets could be heading and why?
Well, going back on the comments from your earlier guest, obviously Meester out earlier talking about no reason to pause at this point, but then you've got Harker and you've got Jefferson kind of pushing for a potential pause. So I think there's just mixed signals from the Fed right now. And so the market is really trying to figure out and understand where is the Fed looking and how are they positioning themselves going forward? Are they truly going to pause because, they've done unprecedented amount of interest rate increases over the last year? So what are they looking at? How does that affect the economy going forward? So I think the market will remain in this choppy stage. And so our feeling is that the market will chop around between this 4,200 level and the 3,800 level on the downside. So given where we're at right now, we do feel that there will be some type of correction in possibly in June or in the coming few months. So we're trying to position ourselves in a way that we feel is able to withstand that, whether that's through quality and just solid fundamentals of companies that we're looking at. So going forward, it's really just market is remaining in that chop phase right now.
Right, and look, we had somewhat of a gold rush. They were calling the NVIDIA rush the gold rush. People were running there, and we saw the markets running up. And as you said, you see some sort of a correction or pullback. And would that be a buying opportunity? I want to get to your stock picks, but just, at what point would you say it's a buying opportunity in general?
Right. I mean, you could at any point, it's really a buying opportunity. You just buy on the way down and hope that things tend to look better in the future for the economy. But generally speaking, I wouldn't really step into like a.
No, it start till 2:30
at this point. I think
what about the leases?
Gains right now. We hold a little bit of it, but I definitely wouldn't be a buyer of that right now. So there are areas and pockets of the market where I would buy on the way down, but there are areas that we are staying away from.
Okay, so I want to get to Palo Alto. What are you staying away from?
Close the longs on the futures.
There's a few of the names, especially in the semi. Obviously, NVIDIA, AMD.
Head and shoulders on the 1 minute. It's at that resistance up here.
We do hold some.
I don't know what kind of retrace we need for a handle. Maybe 25%.
Or adding it as a new position.
I want to look that up, like technically.
Energy is an area that we're not so certain on. Obviously, you've got some news out from OPEC that would suggest that maybe they are going to do some additional
maybe even
cuts.
VWAP.
But we're not stepping.
Oh, it might run out of time. It's 2:30 already.
And then also
2:23.
materials. If we're seeing peak inflation, probably not somewhere that we want to be stepping into from that standpoint either.
Okay, Palo Alto, Taiwan Semi, Johnson & Johnson. Give me a little on each one. These are your picks.
Yep, Palo Alto, we really like this name. 26% billings growth year over year. And that's on a tough comp from last year as well. So the fact that they can keep that momentum going was a very nice surprise. And then revenue growth 20% plus again. And from the guidance standpoint, we feel that it's quite conservative. Given that it's under 20%, we feel that they can do 20% plus. So we think that this is a good name to get into. And when you start looking at the execution of the management here as well, they've been focused on profitability. They've been able to deliver that over the last couple of quarters. And on top of that, they're starting to leverage AI in-house to help with their efficiency. And so I think this is a name that you should play on with AI because it's going to be a big area of the market going forward. And so Palo Alto will be able to leverage this not only in-house, but also as potentially a product offering moving forward. And so if we look at their overall growth over the next 5 years, we're looking at a 25% compounded annual growth rate. So trading at 43 times, yes, you could argue that's expensive, but given the 25% CAGR, continuing on their efficiency path, I think this is a name that you step in here and buy. And then from Taiwan Semi standpoint,
Osmo Kramer, 11%.
This is another AI play, but it's not a direct growth to AI in this instance. So if you look at the NVIDIAs or AMDs of the world, obviously you're seeing that stock jump quite aggressively, and it's trading at a pretty high multiple. Whereas if you take a step back and look further up the value chain within these chips, Taiwan Semi, the manufacturer of this, right? This is a more long-term growth trajectory for Taiwan Semi. And so we feel that trading at 16 times right now, you're getting potentially upside to numbers in 2024, 2025. And so for a 16 times multiple, market multiple on this name is a great buying opportunity. Yes, this is very cyclical, capital intensive, but again, the growth that they'll be able to deliver going forward is worth stepping in here and buying.
Yeah, and Johnson & Johnson, you like that pullback. Give me a few seconds on Johnson & Johnson.
Yep. So as far as their talc settlement, they're making some progress there. 8.9 billion over the next 25 years is the current agreement, hopefully. So I think investors are really just hoping that this gets behind them and the company can look forward to their future pipeline, which is getting better and better every quarter. And so we've also seen some settlements with Amgen on the Stelara product with the biosimilars, which could extend that cliff, allow their pipeline to grow even further over the next couple of years. So I think from a valuation standpoint, the discount that you're seeing,
you're talking about if they get out of the leases of the stores they're trying to close, because they got to leave have some leases if they're trying to keep stores open.
When you have these types of valuation disconnects, you have pretty solid returns going forward. And so again, this is a name on the pullback in the last couple of weeks. We buy it right here.
Right. All right. Tyler, thank you for all those. Some great names that we will keep an eye on. Tyler Elgard, Portfolio Manager, Gradient Investments. Thank you. Coming up next, we're taking a closer look at the AI revolution and the bigger picture and some investment strategies you might want to consider. Coming up next.
If SPY holds just head and shoulders, if it keeps going here. So for a bigger pullback. Gosh, I almost don't even want to trade this. It's so slow. Restart this whole thing. 2 minutes to midnight. 30 seconds here. Hopefully Chrome doesn't crash. Yeah, I don't hear anything yet. Too late. A couple billion in lean tax. Oh, ooh, that would be nice. So what, the stores in Texas objected? Specifically just in Texas? Like Triton Payback. That's what's up. Mo. Mo Bauer. Could even take the short up here. I don't see a whole lot of move to the downside. Maybe to VWAP. Yeah, I'll leave it alone. I'll wait for a dip and try and rebuy for maybe a gap fill. There's still time. Yeah, it's muted for me too. They haven't started, I don't think. Dead cat bounce. You're muted, Mo. This is the earnings call soundtrack. You nailed it. I know it totally is a epic earnings call soundtrack. Unfortunately, all the earnings call soundtracks are copyrighted, so mine's way better though. I'm just kind of consolidating up here. Barbaric coding is serious. GME above VWAP. He's about to go from red to green. Go, maybe a little handle for me on SPY. Yeah. Guess they're just late. Let me see here. Bouncing up there. Yeah, there's nothing on the voice either. Calling in and yeah, they haven't started there either. I can end this channel now. A 5-minute bull flag. Making that money, listen. What a day. SoFi, almost 16%. Well, okay.
Go to tdameritradenetwork.com.
They forgot.
I'm going here or no? You send me this.
Oh. They're starting to figure it out. I think that was a sneeze. Well.
A week basically, Nicole, so I'm not surprised to see a little bit of a pullback. Put all this in perspective, you've got the S&Ps here, the SPX currently trading at 41.89. Look at the high that we saw last week up around 42.31, the low from last week around 41.03. So for the most part, kind of hanging out in the middle of that range here right now. And as we step back, I want to show you how you got the S&Ps holding above the 50-day moving average, holding above the 200-day moving average. I did notice the Dow's actually below it, so large caps are starting to struggle a little bit, but still holding below key levels up about around 4,300. If this rally continues, that's going to be the next big hurdle for the bulls. Kind of a mixed message from Fed speakers here over the last couple days. Barkin and Mester yesterday, but today was more Beige Book and Fed Governor Johnson and Harker, who are both talking about how, well, the possibility for a pause, wait for more data, and then ultimately we can resume if we need to continue to raise rates. But that was a bit of a different message than what we heard, that hawkish tone from Mester and Barkin yesterday. So I think this is a reflection of a market that has a lot of information to focus here on, a fair amount of speculation as we head into the non-farm payrolls in that June meeting.
Yeah, absolutely. And, you know, last week we saw companies piling into bonds in case of a default, and yields were hitting their highest point in a decade. Things have changed. We're seeing yields coming down now. The market seems to be saying, all right, the debt ceiling is decided upon. In the meantime, the dollar has had a decent run. What are you watching when it comes to the dollar?
Both yields and the greenback here, Nicole. And let's just begin with the 2-year, because we saw quite the move up here to 4.5% to begin the week. We've pulled off a little bit, you can see. But look at this, from 3.6 up to, well, we're talking a full basis point here to the upside here, 100 basis points, I should say, a full percentage to the upside. And we've come off a little bit back down to around 4.3, but taking a step away from 2-year. Look at the dollar run-up we've seen from 103 all the way up to the middle of the 104 handle. And a significant move. This puts the U.S. dollar back into the middle of the range that we established last year from 94 to 114. And it's got us right back up to these highs that we saw back in the beginning of March, end of February. Something to keep an eye on. Ultimately, again, I think I'd chalk it up and tie it to some of those comments that we heard from Barkin, from Mester. We've seen some weakness in the euro currency as well. But in addition to, I think there's some unrolling or there's some debt ceiling trade that's playing out here as well. In addition to
red to green on IAP.
Going on. But yeah, definitely watching
nice.
rates on the move. Again, off the highs as of recent, but inching their way back into the middle of the range that we've been in since last fall. So that's starting to raise
Bill
some eyebrows
engaged.
also. If that were to continue, keep an eye on the highs from last fall, and eventually, in theory, right, that's going to become a headwind for stocks. It hasn't really yet, it seems like, at least for the NASDAQ, but definitely something to keep an eye on there.
Yeah, and the dollar at the highest levels since March. So that's something we'll watch throughout this week. Ben Lichtenstein, good to see you. Thank you so much.
Lichtenstein.
All right, let's turn our attention over to retirement planning. Joining us right now, Ty J. Young, CEO of Ty J. Young Wealth Management. Thanks for being on with us. What are the clients calling and asking about? I know there's some laws that may be certainly helping clients right now, but what are they calling and asking?
Yeah, we're waiting on them. They're really late. Hey, Bourbon. No, the IV's high on IEP. I've been selling cash cleared puts on it, which is pretty nice. You can do spreads.
First thing is there's more tax-free
debit spreads, put credit spreads.
Available. There's a Roth simple plan for small
or just get the shares and self-covered calls, honestly, since it's the divvy stock.
And probably the biggest one is that
Where's
there's
that?
employer
Just
contributions
hasn't even
to
started.
Roth IRA or to Roth 401k.
Did they just realize they haven't even started? Just said, hasn't even started. I think they've all been talking, haven't realized. Because it's gone through like 3 different people now. What the heck? What is going on? That's weird. Okay.
Contributions. Sometimes
no for the company.
401ks are profit sharing. That means if you're in that 401k, even if you don't contribute and your company does a profit sharing contribution, you get that money without putting any money in. That can be huge for retirement planning. 529s are now, you can now
I kind of want more PacWest cash cleared puts, but
if you don't use it for education. Used to be
it might be early.
529 plan. If you didn't use it for education, you were
Scared.
kind of out of luck. But now you can
drinking champagne,
IRA and use that money
having a party in the courthouse
for retirement. And the last thing I'll mention is now the required minimum distribution age was 70 and a half a few years ago. It went to 72. It went to 73.
17 minutes late.
By 2033, it'll be 75. So a lot of big advantages there, Cole.
Right, understood. So, you know, you can keep your money in there longer. I thought the 529 change was huge because I think that was a deterrent. People didn't want to put money into the 529. This would have been great for your kid's education. But what if your kid didn't want to do that at school and wanted to become a famous singer or something
for you.
wonderful like that? Then what were you going to do with that money in the 529 plan for Harvard, right? That was sort of the idea. So this seems beneficial. Are there any hurdles or things?
Who's better off, PacWest or MCB?
Their retirement funds at this point?
Well, I mean, I'm happy about these changes. I think they're great, but we always need more. $10,000 for a catch-up provision is way better than the $7,000 before. But $10,000 for if you don't start putting money until age 60 is $40,000. That's not going to impact the 20 or 30 years you have in retirement. I would have loved to seen bigger contributions allowed, $100,000 a year. I know it's kind of wishful thinking, but that would have been fantastic because it really would give investors the opportunity to save more. But I'm happy for what we got with a step in the right direction. And it seems like maybe we're in Washington, we're getting along, we're working things out right now. Maybe we can have some more legislation to benefit American investors planning for retirement.
All right, so U.S. Congress passed the Secure Act 2.0. We are now waiting for Washington on the debt ceiling. We are waiting on Washington for the Fed and rate hike possibilities. So we are looking to Washington a lot pertaining to our markets and our money. What do you think about the market overall? How are you feeling?
There you go, SPY.
Bearish,
make that handle.
Optimistic, to coin that phrase.
Forever.
I would say, as always, I'm The people come to us, they're planning for retirement. They want their retirement secure. We put together the three secrets.
Riley's 311 million shares at NIP.
It's available
We'll
to
give you
your
Riley
viewers
311 million
anytime,
shares.
They can have it.
I'm gonna bring out the
No
calculator.
charge. But it's all about making sure your money's growing, making sure you don't lose it once you've made it, and to minimize fees. I'm cautiously optimistic about the market. Historically, our market goes up. We're not getting a
Someone
lot
has
of help from
appeared.
Washington right now in terms of the kind of legislation we need to stimulate growth. But we have the greatest market.
Okay, are we ready to begin? There's only some people appearing though. Not everyone. It seems like it's slowly. There we go.
Oh, click later.
Oh, join. Good.
Hey, do you want us to get rid of?
Yeah.
Yourself right there.
Buy's coming down. Whoa, big flush on SPY. Someone said something.
Yes, sir. All right. Good afternoon. It is Wednesday, May 31st, 2023. This is the United States Bankruptcy Court for the District of New Jersey. And we are here in the case of Bed Bath & Beyond, Inc. et al. Case number 23-13359. I have an agenda of the matters that are proceeding today, and I will ask that we get appearances and get started with today's proceedings, starting with the debtors.
Good afternoon, Your Honor. Emily
like
Geyer,
Claire.
appearing on behalf of the debtors.
Afternoon.
Good afternoon, Your Honor. Brad Sandler, Pachelski, Stang, Zellin Jones, along with my colleagues Robert Feinstein and Colin Robinson, on behalf of the committee.
Buy dumping. I don't know what's going on.
Good afternoon, Your Honor. Kyle McEvely, Gibbons PC, proposed special counsel to the committee.
Okay.
Good afternoon, Your Honor. Mo Bauer, Dwayne Morris, co-counsel to 6th Street Specialty Lending. Also on the Zoom call is David Hillman, Chad Dale, I think Megan Boland, and Reuben Klein of the Proskauer firm, who is co-counsel to 6th Street.
Okay. Good afternoon. All right. Well, if those are the appearances we're going to take for now, we could also, if someone else wants to appear on a particular matter or application, then maybe they can announce their appearance.
Went long on the
Your Honor,
features.
I meant to speak up. Jessica Mikhailovich from Troutman Pepper, on behalf of Hilco Merchant Services and Merchant Resources and Gordon Brothers Retail Partners.
Okay.
Your Honor, Alan Brody, Greenberg Traurig, on behalf of JP Morgan Chase, the ABL lender. Also on the phone is my co-counsel from Davis Polk, Adam Speen.
Okay. Good afternoon.
Good afternoon, Your Honor. Charlie Starrett of Kirkland & Ellis on behalf of the debtors, and I'm here with my colleague Jacob Black, who will also be appearing.
Okay.
Yeah, totally looks like Blur.
So maybe now we'll proceed the way I just suggested, and if anyone else wants to appear with respect to a particular matter, we'll go ahead and hear them at the time. But why doesn't the debtor start with its presentation?
Fantastic. Good afternoon, Your Honor. Again, Emily Geyer from Kirkland & Ellis on behalf of the debtors. Thank you for allowing us to appear by Zoom today. Hopefully it didn't cause too many logistical issues
Jenny?
On your end. We will try to do this judiciously throughout, but just wanted to give you a brief update on the case progress before we jump into the agenda. As Your Honor is aware, we have our final dip hearing scheduled for next week on June 6th. The debtors and the parties, including the DIP lenders and the committee, have made significant progress, I'd say, in working to settle those outstanding DIP issues. So fingers crossed, we hope to have a fully consensual hearing for Your Honor next week, which we believe will pave the way for a consensual plan process as well. We expect to turn to getting a plan on file in short order right after DIP approval. My colleague will be presenting the bar date motion today, and so that's the first step in getting all of that squared away in a very short time frame that we have. On the sale process front, just wanted to provide an update that the debtors are actively engaged with a number of interested parties. The deadline to designate a stalking horse bidder is currently set for tomorrow, June 1st, but there is a chance that we may come back to Your Honor with a modest extension of certain of the dates to allow time for additional negotiations if necessary, if we decide that makes sense. The sale hearing is then currently set for June 21. So that is all I have in the way of update, Your Honor. I am happy to answer any questions you may have. Otherwise, I will turn it over to my colleague, Mr. Sterrett.
Well, I do have just a couple of
Sure.
small questions. One is, what you talking about the stalking horse deadline for tomorrow. So does that you might ask for an extension? So does that mean at the moment there are no stalking horse bidders?
We are engaged with discussions with a number of interested parties for the potential stalking horse role. This is really if we deem necessary for additional time to get the documents sort of squared away and set, make sure that we've had the necessary time to make sure that we get the most value that we want out of this process. So it's really that question that will determine whether we pursue that extension or not.
Okay. All right. And then how about generally just the other aspect of it, you know, the sale of assets and going out of business sales and the like, how is that going?
Yes, Your Honor, the store closing process has been proceeding as expected generally. There was it's been sort of a quick uptick. There was a lot of activity when we first filed. That activity has, remained sustained and has been proceeding sort of on exactly the time frame that we would expect and hope to see, just to make sure that we are dual tracking that process as well. As part of the sale process, there's also interested parties in various individual assets and the like. So we are sort of dual, quadruple tracking all of those at the same time.
Right. Okay. So generally, according to plan, is that a fair summary?
Yes, Your Honor, absolutely. All
righty. Okay. Those were my initial questions, and why don't we proceed with the agenda?
Okay, fantastic. I'll turn it over to my colleague, Mr. Sterrett, for the agenda.
Your Honor, before we begin, may I be heard very briefly for more than anything, some late breaking news?
What?
Hello?
Your Honor?
Yeah, I see you and I hear you, but it seems like you're not connected somehow.
Okay, let's try it. Let's see if this works. Can you hear me now?
Yes, I hear you and see you fine.
Okay, fantastic.
Yeah.
For the record, Your Honor, Brad Sandler, Pachulski, Stang, Zillen, Jones, and I appreciate certainly what Ms. Geyer said. Just to, we're kind of new to this party, representing the committee. The 7-member committee, Your Honor, was formed, I guess, about 3 weeks ago or so, maybe a little bit more than that. Selected Pachulski as his counsel, thereafter selected A&M as his financial advisor. And the committee members have lost well over $1 billion in these cases. So needless to say, there's a lot at stake here. Appreciating that these cases ended up in bankruptcy, right, after a long, very highly public, windy, and arguably questionable path. The committee once it got up to speed, began engaging with the debtors and the lenders, with most of the engagement with the filer lenders, predominantly because of, the committee was cognizant of the court's ruling at the first day hearing regarding the roll-up and whatnot. All of that engagement paid off, as none of the operational motions today are contested by the committee. So to Ms. Geyer's point, there's been a lot of work done behind the scenes. As to the DIP, the committee saw a lot of issues with the interim DIP order, and decided to pursue really a dual track approach, one that would lead to a fully contested DIP hearing. In fact, we have depositions scheduled over the next few days. The other one that would lead to an amicable resolution, at least with the DIP lenders. The last few weeks, there have been substantial discussions, in particular, as I said, with the filer lenders, some of which were very intense, extremely intense, as you can imagine. But I'm pleased to report to your honor that the committee and the filer lenders, as of today, have reached a case settlement in principle between them. We will, of course, provide the terms of the settlement to the other parties, and while there's still wood to chop to document the settlement will unite the entire capital structure. It should minimize friction cost within the capital structure and frankly maximize value to the economic stakeholders. So I do want to give thanks to Messrs. Hillman and Dale for their continual professionalism throughout our negotiations, and their efforts in getting us to this point. And with that positive news, Your Honor, I will pause to see if you have any questions. Otherwise, when we see you at the final DIP hearing, we'll go through the specifics with you.
No, and Mr. Sadler, I certainly appreciate that there is considerable, substantial effort that is going into presenting all these agreed upon orders to me, and that and especially now that you're speaking about the DIP order and that you have an agreement in principle on that, I recognize fully how difficult that must be and how hard people are working to get to those points. And it is greatly appreciated. More than that, it seems necessary in this kind of fast-paced proceeding and the way the whole process started. Everything had to happen very, very quickly, and if you get involved in extended litigation, that usually slows things down quite a bit. So on every level, I appreciate those efforts, and I'm certain that they will continue in good faith among all the parties. I have no doubt, and as they say, the proof is in the pudding, because up to now, all these orders have been presented on without objection or on consent, and I know that that's not easy. So much appreciated all the way around.
Thank you, Your Honor.
With that, Your Honor, Charlie Sterrett of Kirkland & Ellis on behalf of the debtor, I'll launch into the agenda here. I saw Emily briefly went off muted. I'll go ahead and get started. Okay. Well, we'll keep the good news rolling here with what should be, an agenda full of agreement and negotiated language that resolved all of the formal and informal objections received by the debtors as to the motions before the court today. So I'll proceed first with an overview of the agenda and then take a handful of the motions before ceding the podium to my colleague Jacob Black. So first up will be the final order on the store closing motion, which was filed over a month ago now. I'll then turn the podium over to Jacob Black for the bar date motion and two of our lease termination motions to be heard today. And then I'll bring us home with the balance of the agenda, the remaining first day motions, all of which will be heard on an uncontested basis today. Launching into the store closing motion, we filed a revised form of final order at docket number 576 yesterday. This reflects language that was agreed to by the parties, resolving a litany of formal and informal objections from landlords, the committee, taxing authorities. And the relief contained in the final order on the store closing motion largely follows that granted by this court in the interim order back in April and set forth in the motion. Unless Your Honor has any questions specific to the store closing final order, we respectfully request your entry of that order.
Well, there is one question I have, and it's on, and Mr. Sandler maybe should be involved in this as well. Is that on page 7, paragraph 7? It says on the third line, provided, however, the debtors shall provide the official committee of unsecured creditors, the committee, with 2 business days notice to object to any modification, amendment, supplement to the consulting agreements. Then the next sentence starts, should the committee fail to object in a reasonable time. So my only question, and I'm asking this out of just for clarity and to avoid any possible question mark, is the 2 days business notice equal to the reasonable time?
Yes, Your Honor, that's our understanding of that provision.
Okay.
All right. Your Honor, I will defer to my colleague, Colin Robinson, who worked on this motion.
Good afternoon, Your Honor. Colin Robinson, Pachulski, Stangziel, and Jones on behalf of the Official Committee of Unsecured Creditors. Your Honor, the 2 days works both ways. So yes, the 2 days business days and then reasonable notice would be two business days.
Okay, I was just wondering why it said 2 days in one sentence and then reasonable time in another. Just being a lawyer, you wonder whether that's might mean 2 different things, but I guess it doesn't.
No, Your Honor, as we have since the beginning of the case with the debtors and other professionals involved, if we get notice of something, we're pretty quick on our turnaround. So two business days will be fine.
All right. And then I just, now that Mr. Robinson has spoken, I just want to disclose for the record that Mr. Robinson and I worked together maybe at least 15 years ago and haven't really worked together since. And he's appeared before this court in other matters, but I just always disclose that. I don't think it's anything other than a disclosure issue, but I just wanted to let everyone know.
Thank you, Your Honor.
Okay. All right. Well, that was my question, and it actually is kind of similar to it's in more than one place, but I think now reasonable time means what it says right before it.
That's right, Your Honor. And the language reflects the conversations Colin and I had over the past several weeks, and we become acquainted, and arm's length negotiations on all the language in these orders.
All right. So with all that, and with, as I just said, and as the parties alluded to, with all the effort that has gone into presenting this order, and the fact that it has been proceeding, and according to what I've heard, proceeding according to plan, I have no issue at all approving this as a final order. Okay.
Thank you, Your Honor.
Thank you.
I'm going to next cede the podium to my colleague Jacob Black, who will take us through the bar date motion and the 2 lease termination motions before the court today. I'll return to take us through the balance of first day motions that remain, which includes taxes, lien claimants, and NOL. So I'll be back, but I'm ceding Jacob Black.
Glad to hear it.
Thank you.
All right.
Good afternoon, Your Honor. Jacob Black with Kirkland & Ellis on behalf of the debtors. I'll be proceeding with items 2 through 4 on the agenda as Mr. Sterrett said. Agenda item number 2 is the bar date motion filed at docket number 295. The debtors have received no formal objections to the bar date motion and have worked through various informal comments with parties including the United States Trustee, the Unsecured Creditors Committee, landlords, and DIP lenders. The revised form of agreed upon order reflecting the informal comments was filed last night at docket number 569. Rather than get into the specifics of the bar dates, Your Honor, I'll represent that the bar date orders are routinely granted by this court and are required by section 502 of the Bankruptcy Code. Unless Your Honor has any specific questions on the proposed bar dates or other parties would like to comment, we respectfully request entry of the revised order as filed.
All right. I do have a couple of small similar kind of questions. Is that, for example, on page 8, paragraph C. Claimants submitting a proof of claim through non-electronic means who wish to receive a proof of receipt of their proof of claims must also include with their proof of claim a copy of their proof of claim in a self-addressed stamped envelope. So just a couple of things on that, and it really just details is that so the parties that electronically transmit, they would get a receipt automatically. Is that how it works?
Right. My understanding is that if they receive it or if they submit it electronically, then yeah, that's automatic.
All right, because I thought it would be people that submit electronically would also want to have proof or acknowledgement of receipt, just like people who file by conventional means. And then I didn't quite see in the order, but I believe it's in the notice where the order doesn't really say where you would file by conventional means, but that's in the notice of the bar date, and that's basically it.
That's correct, Your Honor.
Alrighty. And then there's a spot, and now I'm just, I thought I tagged it and then, okay, here it is, paragraph 12. It says, the debtor shall cause the bar date notice and proof of claim forms to be served within 2 business days of entry of this bar date order by email or first-class mail as applicable. And I wasn't sure how that as applicable, what that actually meant is what I'm saying.
If we don't have an email address, then we would use the physical mailing address. But to save costs, we prefer to use the email address wherever we have one.
So some people might only get it by email?
That's correct, Your Honor.
Okay. Did those people acknowledge a willingness to accept something that significant and official by email?
No, Your Honor. It's my understanding that this is mostly to save costs for the estate as we're looking at a wind down.
Okay. All right. I'm going to ask if the creditors committee, I guess you don't have any issue with it because you indicated consent to this. I don't know if that would be Mr. Robinson or Mr. Sandler.
Your Honor, Colin Robinson again for the committee. No, the committee's okay with that provision, Your Honor. I've seen that traditionally in the last few years in larger cases like this, especially liquidating cases where you have thousands of creditors, and there's pretty extensive email lists, and so we have no issue with that.
Okay. All right. All right. Well, if the creditors committee is okay with that for their constituents, then I'm okay with it. And I don't have any other comments to the order, Mr. Black.
Thank you, Your Honor.
Anyone else wish to comment or be heard? All right. I will, like the prior orders, this has obviously been vetted through the committee and other parties and interests, and everyone is okay with it. And I looked at it myself. I had a couple of small comments as I indicated, but with that understanding, I'm good with this order as well.
Thank you, Your Honor.
Thank you.
I'll move on to agenda item number 3, which is the Taft rejection and termination motion, which was filed at docket number 306. This motion seeks authorization for the rejection and termination of a lease, which I'll refer to today as the Taft lease. governing premises in the shopping center located at 11 Taft Road, Tatoa, New Jersey. And the motion also seeks authorization for the debtors and the landlord to enter into the lease termination agreement attached as Exhibit 1 to the proposed order, by which the debtors shall reject and terminate the lease in exchange for, among other things, a payment by the landlord to the tenant of $3 million, a release of all claims held by the landlord against the debtors, and a release of the tenant's claims against the landlord. And finally, the debtors transfer to the landlord of certain solar facilities and equipment located on the premises. The debtors aren't aware of any objections to this motion and believe that the lease termination agreement, including the sale terms, are supported by sound business reasons. If your honor has no questions, the debtors request entry of an order authorizing the relief requested with one change from the as filed order, which the debtors will make in a revised order shortly after this hearing. That change will correct the lease counterparty from Robert A. Wilson to Taft Associates, which is found on the last page of Exhibit 1 to the proposed order, page 16 of 16.
Okay, but you'll be submitting a revised order on that?
Yes, shortly after this hearing.
All right. Well, counsel here in the court has risen and come to the podium, so I'd ask so that please identify yourself and who you represent.
Thank you. Excuse me. Thank you, Your Honor. May it please the court. Richard Zucker from the firm of Lasser Hochman LLC, representing Taft Associates. We have no objection to the entry of the revised order. There were a couple of things I want to just put on the record, and that is that the attachment to the lease termination agreement, Exhibit A is going to be revised, and I think that was just dealt with. Secondly, there needs to be a bill of sale that needs to be signed by both Bed Bath & Beyond and by Harmon Stores. And the form of that document, as I understand it, has been agreed upon by the parties. It has not yet been signed, however, by, at least to our knowledge, by either debtor Bed Bath & Beyond or Harmon Stores. And the last item relates to the SREC and Solar Asset Management Agreement, which needs to be signed by Mr. Eckert, who is a consultant to the debtors, and that needs to be signed on behalf of Sun Performance LLC. And again, the form of that agreement has been agreed upon between counsel for the debtors and Taft Associates.
Okay. Mr. Black, do you have any comment or?
That all sounds correct to me.
Okay.
Thank you, Your Honor.
Thank you, Mr. Zucker.
Appreciate it.
All right. So again, based on not just the consent of the parties, but also the terms that are proposed and substantial funds that will be paid to the estate and releases and rent relief, certainly seems like an appropriate exercise of the debtor's business judgment, and I will approve that. I'll approve the lease termination agreement.
Thank you, Your Honor.
Thank you.
I'll move on to agenda item number 4, which is the debtor's Beverly Hills lease termination motion, filed at docket number 429. The Beverly Hills lease rejection motion seeks entry of an order that authorizes the rejection and termination of a lease governing the premises in the shopping center located at 31535 Southfield Road, Beverly Hills, Michigan. I'll refer to this lease today as the Beverly Hills lease. The motion also seeks approval of the lease termination agreement, which was not attached to the motion as filed, but was subsequently filed at docket number 447, by which the debtors agree that upon the termination date, which is July 31st, the Beverly Hills lease shall be deemed rejected and terminated in exchange for, among other things, the landlord's termination payment to the debtors of $170,000, subject to offset of June and July rent and estimated taxes, and the mutual release of claims between the tenant, Bed Bath & Beyond Inc., and the landlord, 31535 Southfield Road, LLC. The debtors believe that entry into this lease is supported by sound business reasons including the receipt of the termination payment and the mutual releases, which resolve a dispute over whether the lease was terminated pre-petition. If your honor has no further questions, the debtors request entry of an order authorizing the relief requested with one caveat, which is that the debtors are going to file a revised order attaching the executed lease termination agreement shortly after this hearing.
Okay, does anyone else wish to be heard on this application?
Your Honor, it's Colin Robinson again for the committee, and this statement really applies to this one and the last one. The committee, along the committee's professionals, were able to work with the debtors' professionals, Jones Lang LaSalle, A&G, to get information on both lease terminations and found both economics of both deals. I know you've already approved the one, but we did find the economics quite acceptable. And same goes for this one, Your Honor. The Beverly Hills property in Michigan, and the committee had no issue with both terminations.
Okay, appreciate that, and really for those reasons, I find also that this is an appropriate exercise of debtors' business judgment and sound business reasons to do it. So I'll approve this lease termination as well.
Thank you, Your Honor.
Thank you, Mr.
Thank
Black.
you, Your Honor. I'll now turn the podium over to my colleague, Mr. Sterrett, who will address the remainder of today's agenda.
Okay.
Good afternoon, Your Honor. Charlie Sterrett again of Kirkland & Ellis on behalf of the debtor. I'm back. So the remainder of the agenda consists of first day motions, final orders, similar to what we began with, the final orders on taxes, lien claimants, and NOL. These reflect comments from the committee and other parties in interest, but predominantly committee comments in line with those that we pulled out from the store closing order and looked at. It's, notice rights, reporting obligations, and updating notice information for the committee in each of these orders. We filed revised forms over the last few days. So taking them in turn, with respect to the taxes order, the final relief largely tracks that which was set forth in the interim order approved by this court in April. We filed a revised form on Friday at docket number 457, reflecting the committee's comments and a slight modification to the definition of taxes to ensure that the debtors have the relief necessary as requested under the taxes motion going forward without having to return to court. So unless Your Honor has any questions with respect to the final taxes order, we respectfully request your entry of that order.
All right, well, this one, this one applies to both the taxes and the lien order. And in both of them, in paragraph 2, in both of them, it says that you have to provide notice to the committee prior to making any payment, 3 business days notice of any taxes and fees as to the taxes and fees, and then as to the liens, it's 2 business days notice of any amount in excess of 100,000. And in both cases, it says in the event there's an objection, no disputed payment may be made until the committee's objection is resolved. And I'm just wondering whether in that instance, I mean, I don't know what it looks like it's big numbers. Does this contemplate that if the number is 200,000 or 250,000, of which 100,000 may be paid, it is not disputed, but 150 is disputed, that the 100,000 can be paid, or is it just that nothing can be paid until the dispute is resolved?
Your Honor, I'll jump in there. Colin Robbins for the committee. I think, Your Honor, until the dispute overall is resolved, we would have no amount paid. That being said, Your Honor, I think we'd be reasonable and practical and take it on a case-by-case basis. If we could work out a resolution with the debtors, the payment where a portion should be paid, we'll consent and tell the debtor that. But until we get a resolution to that effect, we would seek to have the whole payment withheld.
All right. Well, of course, I'm saying it because taxes and liens tend to accrue interest at high rates, and I think to the extent you can avoid some of those, even a portion of them, it's probably not a bad idea. But again, I'm sure that, as is evidenced by all the presentation of all these agreed upon orders, that the parties will work together to come to a reasonable resolution. And I think that representation is and should be enough, unless someone else has a comment or an issue with that. Okay. As I say, I reviewed these motions, and I did jump ahead a little bit and went to the lien motion as well, and I do recognize, as I said before, the effort that has gone into getting to this point, and they certainly look like well negotiated, reasonable resolutions of all these issues. So unless somebody has anything else, I'm prepared to approve both of those orders regarding payment of taxes and fees and liens.
Thank you, Your Honor.
Thank you,
you.
Your Honor. That brings us to the last item for today, which is the final order on the NOL motion, the net operating loss motion. This one reflects the least substantive comments of the bunch today, and it includes just updating the notice information. So the debtors, professionals were engaged with committee professionals to determine whether more significant changes were necessary in this motion, or excuse me, in the final order on this motion, and determined that in the meantime, at this point, no further large sweeping changes were necessary and can be sought through separate motion if necessary. So that was the reasoning on the delay behind the NOL order, and a final agreed form of order on this motion was submitted to the court on Monday at docket number 490.
All right, does anyone else wish to be heard on this motion? Okay, I've reviewed this one as well, and you'll be happy that I don't have any questions on this one at all, but I do appreciate the significance of this. There's a lot of, in addition to creditors, including bondholders and shareholders who are very interested in this case, and notice and opportunity to be heard is very important to all of them. And I think this motion, as well as the other motions we've approved, accomplish that. And again, I want to thank everyone involved, the debtor, the committee, the lenders, the ad hoc bondholders committee, all parties involved, government agencies involved, for the collaborative and cooperative effort that has been evident in this case throughout. And really, it's to my benefit, but that's a small part of it. I think it's of tremendous benefit to the entire process, and that's who is going to end up being hopefully getting a better result and a better return, is as a result of all these procedures and orders that are being put into place and sales that will allow the debtor to maximize the value. And as we said, as Ms. Geyer said at the beginning, I guess that with a quick plan process, that also saves a lot of time and money. So again, thanks very much to all. And I know I was informed just before coming out that there is another order shortening time requested regarding the lease termination, and I will get to that as soon as I get back to chambers. And I usually don't have a problem signing those, because I assume, and I think I correctly assume, not only did the landlord and the debtor agree, but also the creditors committee signed off, and probably the banks and everyone else. So I think shortening the notice on those is not a big issue at all. All right. unless there's anyone else that wishes to be heard, I think that covers things for today.
That's
And
all
we'll
there. That's all that
back in
remains on the
about a
debtor's
week.
agenda. That's right.
Well, thanks very much. We'll see you on June 6th.
Thank you, Your Honor.
Your Honor.
Your Honor.
Thank you. Appreciate it. Bye-bye. Have a good afternoon. Is this?
All right. So that girl, that was probably the most interesting thing to me, how she answered to the stalking horse bidder, because she was basically saying we might be wanting an extension on that for the 1st, which is tomorrow. Said, I don't know yet, but we might. And then the judge asked, well, do you have any interest? Do you have a stalking horse bidder? And he's trying to kind of nail her down on it. And she didn't want to specify. She just referred back to the interested parties, said, well, we have a lot of interested parties. So that was her kind of deferring the question. Yeah, she was a little coy about it, though. Kind of interesting that, yeah, it seems like it did kind of seem like she was trying to be not share too much really about the stalking horse bidder, because the judge asked her pretty forthright, like, well, do you have like interest? Do you have a stalking horse bidder? And she was just kind of generic and broad with her answer. And I mean, he was questioning that because she was already talking about potentially extending the deadline. So yeah, that seemed pretty bullish. And then in the end there, when the judge was talking about just, I guess, shareholder value, which didn't mean a whole lot, but kind of interesting also to hear him mention that. Yeah, well, I was ready. When that guy said I have breaking news, I literally opened up TD. I was like ready to buy. I was like, dude, if there's something crazy, I'm just finishing the account off into barbecue. I don't know what his breaking news was, though. I mean, it was like, didn't seem like anything specific. Yeah, what did you guys think about it? Seemed pretty straightforward, other than that the beginning with that lady and kind of that bit about the deadline and if she had a stalking horse bidder. Wiped out 2 location, got paid to do it. Yeah, and then what they were talking about with the dip financing, I'm not sure if that was good or bad what I was hearing. It sounds like they want an extension on that, or there's a whole nother hearing or something on the dip financing because they're having issues with it, or I wasn't quite sure what they were saying with that. Yeah, they were just talking about 2 locations there, huh? And it sounds like they're only gonna have to pay like a couple $100,000. I don't know if I heard that right, but a couple $100,000 to cancel those leases, which is crazy. If that's true. With any auction or any bid, you want to have as much time as you can, to get the highest bid. I don't know how it works if they're able to accelerate it, but if the buyer is not able to accelerate the deadline, or say basically, this is my offer and I need an answer by tonight or tomorrow morning, or give them a deadline, which they probably can't do it with it like this, then yeah, you want it to kind of sit out there as long as you can to get the bids rolling in. I know with houses, when we buy houses, like we always put a short deadline on my offer, just so they don't shop around other bids and try and run me up. But I'm assuming with this, that's not really an option. So they haven't extended it yet. The bid deadline is still for tomorrow. Looking to see if there's a head and shoulders here, but I'm seeing a bigger cup and handle still playing out. I don't know if I have enough time, but we'll see. A break of this high and a gap fill, I think, could be on the table today or tomorrow. Doesn't happen today. It's like a perfect cup and handle. The FILO settlement? Oh, okay. Yeah, no, the extension wasn't anything bad. I thought it was interesting how she was kind of trying to kind of just be general about her answer and not wanting to give him specifics. I'm not Pulte. That guy's got a very distinctive voice. I think you're Pulte, Ace. You weren't in chat when we were listening to Pulte. I think there'll be a buyer. It's I guess I've kind of always assumed that. I just don't know if it'll give shareholders any value. Depends on what they buy it at, depends on the terms. Bed Bath gets paid a total of 3.17 million to cancel those leases? How does that work out? Crazy. You better.
Is really why I picked this one. This is one of the biggest trades that I saw in terms of just net contracts actually involved in the trade. All of them are actually risk-defined spreads in some capacity. But this
So
one
next
involved
next hearing I guess is on the 6th.
contracts as
We
the
might have
trader bought
news before then. I mean the
of
stalking
the
horse
September
is for
monthly
tomorrow.
37.5
There might be a
call
docket for them
proposals
extending it.
$1.17.
They'll have to
It's a
they'll have to
$2.5
request that
wide
extension
spread,
before
so
tomorrow
half the width
at some
of the
point.
strikes would be $1.25. We always use that sort of as a loose benchmark for these trades if you're sort of looking for that one in the money, one out of the money, equal risk reward. So this slightly under that, but also a way longer term trade than oftentimes we would talk about. It is slightly in the money though. Break even, you'd simply add that.
See here, I might just want to leave these on for overnight.
37.5, so 38.
Yeah, I think so.
Doesn't need a huge move to the upside here. I would say this is a little bit more of a binary trade given its time
Like a
frame.
gap up tomorrow.
If you were bullish on a name like Uber, likely you'd believe that the stock could probably find its way above 40 in the matter of the entire summer going out to the middle of September. At the same point though, if it
Temples
failed
too, yeah.
to get
I don't know
that
what time it's due tomorrow, but
probably not unreasonable to think that it could fall 20 cents over the next few months as well. So
I mean, it's been doing great.
no doubt about it. I would say this is a strategy, though, that is kind of more, like I said, I think binary is the word. This is somebody who believes Uber will be higher and is basically putting a pretty comparable amount of money up for risk as they are as they stand to gain. They risk just under 1.2 million to make just over 1.3 million in terms of max loss, max profit.
So it's kind of a 50-50 situation.
overall it was easier and less exciting than I thought.
I would say, rounding, it's a couple million here between friends. I would say it's basically 50.
Yeah, it's not
I think
typically
that
very exciting.
New policy is interesting because I think partly ditching the old incentive is maybe giving some nod to their competition, Lyft, falling behind here. I mean, the chart for Lyft is kind of looking like the company's really
Thanks for
gonna
sticking around, guys. Thanks for the support today. We've got 46 likes on the stream. Well done. Appreciate it. Barber coating still playing out. Still building maybe a little cup and handle here on the week.
they can't really be giving out freebies anymore. It's, really time for them to push profit.
Just need to see if 47. Appreciate it, guys. Just need to see if this level continues to hold. We touch it again tomorrow. Yeah, I'll be picking up some more shares on that 23 cents if we hit it. Because today, pretty solid bounce off of it so far. Got about 20 minutes to go. Always get it end of day flush.
It's really designed for someone who maybe
yeah, looking good.
Uber or is regularly delivering food to their home, and so I would say that they're just trying to restructure it in a way that benefits those who use their services often.
Sounds good, Bourbon.
Incentivizes
I'm not signing off yet.
And as you said, maybe
we've got about
just the fact
20
that
minutes
maybe had a
looking at
comparable service, and we'll still have a comparable service
some Pac
as
West,
far as, the most recent
cash secured
information.
puts.
They're not that worried
IP up 2%. Look at you.
How about Activision? Let's talk some video
Continuing
games
this
here.
channel.
Shares are trying to grind back after they got
Filling that
blasted
gap.
on the deal getting axed.
Yeah, and so
Very
this
nice.
is a
Look for a red day to
situation
get some more
where,
cash secured puts on this probably.
You don't necessarily know exactly how all this is going to, of course, play out. It's still somewhat in a flux, but granted the fact that we know that things have been kind of spinning in terms of recent approvals and hurdles being cleared, the size of this trade and the relatively short-term time horizon in which a trader is taking basically a strategy that can go 10x if they're right.
it makes you think, does somebody know something here, or are they just taking a shot? And so let's get into the details here. 9,494 the June monthly, so just a couple weeks from now. 87 and a half call verticals traded for 25 cents today. So, you know, I don't know if this is just a random number of contracts that they put in, if they're trying to buy 9,500 or maybe 10,000, and this is just what ultimately was filled. But this is a big trade. 87 and a half call vertical for 25 cents. Again, this is a strategy that is essentially something that can go, 10x for a max profit. You know, risking 1 to make 9 effectively on this. So 237,000 risk to make just over $2.1 million. But because this is a stock that's in play, we have been getting updates. To me, this is someone who thinks, in the next couple weeks,
OPEC has banned reporters from Reuters, Bloomberg News, and the Wall Street Journal to its next meeting.
This stock up
Wow.
towards its deal price, because the deal price, a little bit over $90. That, of course, would take this entirely in the money. That would be max profit. I recall doing one of these, maybe a year or two ago, and we had seen a weird mosaic trade as way out of the money, comparable to this, and all of a sudden, some stuff happened. Fertilizer prices got really expensive. So not always does unusual auction activity mean someone has some, inside baseball on something, but sometimes it does. And I think whenever you see something like this, it should at least pique some interest, and we'll see what happens in the next couple of weeks.
The expiration for this is when?
June 16th.
Okay, I'm not sure if it's going to be in time for in their final hearing, because I think that's going to be in July as they appeal the UK. But who knows? Stuff could develop in between now and then.
So tomorrow at 8:15 we have ADP employment. Initial jobless claims at 8:30. So
trade, of course.
maybe we should close these before that.
What's going on? What's the latest options trade?
Super bullish.
Could definitely move the market.
July 21st, 500.
Manufacturing PMI and ISM manufacturing at 10, 945 and 10, construction spending.
That's the only way I could say that. What I mean by this is that
So
really
8:30
vertical move that you
pre-market,
see
we
in
have
the
some
last couple
catalysts to
weeks
move
on
the
far
market.
right of this 1-year chart. Someone who's willing to risk just over 700,000 to make just over 14.2, actually just under 4.3 million dollars. So break even is 502.35. But this is someone who thinks this thing can continue its parabolic move to the upside. It is taking, obviously, basically, 1 to 25.
Head and shoulders are on AI.
So super speculative. Obviously, a giant.
When are they going to offer shares?
You never know how big someone's portfolio is, and how much risk they're willing
You'd
to
have
take
a fat
relative
share
to
offering.
their overall position. But whenever somebody's buying something that's over $100 out of the money, you know that they're pretty bullish.
All right, there it is. Well, I'm not surprised.
How likely sure?
Thank you, Alex.
I don't know.
Okay,
Really don't know.
there on Activision. Maybe Uber too, with the change to the.
I've not traded OTC stocks. I've not traded stocks in Chapter 11. I mean, I have a little bit, but
All right, speaking of chips,
yeah.
tomorrow I'm looking forward to talking autos with the CEO of On Semiconductor.
Holding stocks through Chapter 11. Not something I'm accustomed to. So I don't know the likelihood of the outcome. It seems like there's a lot of value for BBYQ, and it's not reflected right now in the share price, more or less. So I would assume should be pretty good premium from where the price is right now, and hopefully that's high enough to where shareholders are rewarded. That's pretty much it. There you go, SPY. 15 minutes to go. Still get a gap fill before end of day. If we get that gap fill, I'll probably close. Not hold after hours. Got this resistance still to break. Yeah, yeah, for sure. It depends on who wants to buy it. Absolutely. Whoa, big pop on SPY there. Did you see that technical break? Holy crap. Just like a technical break at that level. Explosive. That is neat. So we gotten the long down here. We called the RSI divergence down here. It was subtle, but it was there. Slightly higher RSI to lower price action, so that's bullish. I did pick up some longs here. I got stopped at them on this wick, but at any rate, literally caught the bottom of the day. Took the short up here on this head and shoulders. Yeah. Got stopped out a few times. Didn't trade it perfect. Happy that I guess I stuck to rules, stuck to stops. Could have gone anyway. This could have ended up just being kind of a bear flag and then selling off flushing further, so had to protect in case that was the case. Kind of intraday cup and handle. We started to see setting up, starting with this RSI divergence, kind of the bottoming here on the chart. And then this flush down to VWAP. I went long on that flush just because I saw the handle coming. I didn't know what was going on, but that was a violent flush. Went long, and that's still what I'm holding here for this handle breakout, which is what we're getting now. So had enough time in the day, I guess. Coming up to 10 minutes can get kind of sketchy, wild. We'll see. Are they know on the 7th? I'm not sure if we'll know on the 7th. 7th is next hearing, so they can have filings. We don't have to wait for the court hearing. Look at that. We don't have to wait for the court filing. It can just be a filing that they drop with names. So I think that could be any time. Yeah, I mean, I still feel like any time we could be suspended. You know, halted pending news. LPTV never filled me. Big Swan. Stop looking at me, Swan. Good idea. So I got real close to the high of the day there.
Elsewhere too. Dollar still strong. Bonds too firm though, and we're scratching our heads on that one a bit, Dan.
Yeah, Oliver, it is an interesting dynamic. For sure, when you look at the price action in those two asset classes, because it is counterintuitive to what you typically see. But I think overall, Oliver, that, it's a shifting dynamic as to some of the central bank activity from a global perspective. I mean, you're looking at the euro really continuing to realize further downside, and that makes up a big chunk of the dollar index. So that's the driving factor here today. Couple that with the yen also, showing some significant weakness. Not so today, but in general. But overall, that trend is continuing to evolve, and yet I think the pricing structure in the interest rate environment today is being dictated by the Fed speakers and some of the expectations there. So I think that's the driving factor between those that divergence today, Oliver. But overall, when you look at the markets, they continue to realize some recovery here as we move towards a close when you look at the equity markets.
Okay. Yeah, we just can't push stocks too far lower when you got at least half of the big caps still in positive territory.
Right.
But we're also getting quite a bit of data the next couple of days. Employment after jolts this morning. What's this dollar telling us about hikes? I mean, is that now looking like a done deal?
Well, I don't know, Oliver. I'm not so sure. To me, it looks like, that there's a higher potential now that the Fed will most likely hold in June, but that can vary quickly based on some of the data points that we receive. And certainly Friday will be another big influence in that pricing structure. But, the other thing that's taking place in the equity markets, I want to point out today, Oliver, is at least for today, we're seeing a bit of a rotation in some of those areas that have really struggled this year. So you're seeing some outperformance in healthcare, consumer staples, utilities today, as the pressure is a little bit more involved in the tech sector, at least for today. So some rotation there. But looking at the interest rate environment and the dollar and the dynamics, I do expect that we'll see how the data pulls out on Friday.
Here's your 10 minutes of
overall, I
Fugazi.
think the market's anticipating that the Fed possibly could hold, and maybe
Yeah.
that's why we're seeing
I'm talking about barbecue.
some of the other asset classes reacting
Actually
to
getting
that
suspended.
Yeah, it's interesting. I
The
like
news
that.
comes out. I mean, corporate action.
We've got gold up a little bit here today.
Yeah.
Bitcoin's down.
I'm
That's a
selling the
spread that's always
LPTV. That's what that
interesting
was.
to me is maybe what it says about tightening versus loosening. Where does that fit in?
Yeah, it does. I mean, that and
Head and shoulders on the 5 minute.
Now at 68.
But thanks so far to the last 10 minutes, we really can still fill this gap, I feel like.
Pretty big two-day slide there, and now in the lower end of the range. I mean, a break of 65.5 would probably signal further downside for WTI, so that could shift the pricing structure, and it could have an impact on the dollar. Could certainly have an impact on interest rates as well. And copper is another one that's coming off of 7-month lows. So the economic activity from a global perspective continues to be show signs of a very challenging environment. And that's another reason I think why possibly the Fed could be on hold. But the big thing also that we're not even mentioning today is, I don't know if it's settled yet or not, but the debt ceiling situation and the vote. That continues to influence the markets. So there's several things today, Oliver. You can even go to the regional banks. So I think the market's just kind of in a pattern here of trying to maybe reprice things a little bit ahead of the big announcement on Friday.
All right. Well said. Thanks for the check-in, Dan. Helpful framework for us on the cross-asset look of the day. Dan Deming, Managing Director of KKM Financial. Let's come back and continue that conversation with Colin Martin and Mike Townsend and check in on the status of that debt ceiling. I think we're supposed to maybe get some solutions starting tonight.
bonds and the riskier parts of the market. But really all we saw as we got close to that deadline were sort of, mispricing and volatile yields with treasury bills. But now as it stands, with it's relatively likely, as Mike put it, that we will get a deal done, it really does come down to the economic data. And that really showed itself today, where we got sort of something for everybody with the economic data. We got some disappointing numbers with the Chicago and Dallas Fed. But then we got a positive spin with a better than expected JOLTS numbers, showing that maybe the labor market is stronger than expected. And that resulted in treasury yields really going all over the place, but finally ending the day a little bit lower. So it is going to come down to economic data. JOLTS was a big headline right now, but that's just one piece of the labor market puzzle. And I think Friday's employment report, especially the growth in wages, will be something that we'll be focusing on, and I'm sure Fed officials will be focusing on, to see how much wages are growing, how strong is that labor market, and can that
Ready
keep
for the
consumer
bell?
spending strong?
You're getting the bell.
Why do you think bonds are so resilient and firming the last 48 hours despite that real surprisingly strong jolts? The Fed odds of a hike going up in the background. Seems like there's a lot of reasons here for yields to continue their pretty steady climb from the last couple of weeks. But to rally all the way back and yields drop after this morning's jolts.
Look at that sell-off. Yeah, I know better than holding through 10 minutes.
Seems like whatever happens on the economic front, whatever Fed officials are telling us, the markets just continue to price in cuts down the road.
Sometimes it goes up, sometimes it goes down. 10 minutes. There it is. There's your ding ding.
Even though Fed officials may hike one.
Yeah, I should have taken profits before 10 minutes. Oh well. Right today, barbecue down 3% on the day, held flat. Barbacoa did well though. Bounced off that support, showing more confirmation that that is support, that 2340 area. See tomorrow what kind of volatility we get. If we get a dip down there again, we see some kind of support. I'll probably be picking some up tomorrow. Yeah, hearing went good today. SPY did some stuff, down 0.5% overall. I think we might have a bit of a rally up, just seeing this cup and handle. And I have to erase the last 10 minutes of screwiness. But in the longer term, I think we're kind of in a downtrend with this RSI divergence still. I don't know. It's kind of consolidating, kind of undecided also, because MACD's flipping back and forth. And it's really just consolidating in this range. So, big range. Let's see. GME is pretty flat today. Oh, it actually ended up being down 2.2. This really pulled GME down. I think GME's still in this, yeah, it's still kind of in this channel. So, yeah, it did create a bit of a divergence there. So, need tomorrow to be green to reset this divergence. Price action still solid, but I don't like that. And Weebles, of course, still trading there. Down 2.25. The IEP I think went red to green. Yeah, that's not bad. I'm looking for a dip on that. PacWest had a little rally in today. Yeah, interesting. Barbecue. Yeah, I heard that bankruptcy report. I should know that's how much it would be. I'm gonna swipe Ferrari. Your average is $10 a share. This is the way. 10 cents, okay. I'm not sure if GME will get any kind of pump from barbecue rally. I don't know if it'll happen on OTC. Dang, should have closed before the 10 minutes. Oh well. Got greedy. Thanks, Trader. Thanks, Ace. Appreciate the gifted memberships today. Kind sir. Much appreciated. Let's see. If you did get a gifted membership, jump on our Discord, send me a DM, give you the happy crew roll. Thanks, Granite. Thanks, Passing Cloud. Thanks, Sean. Thanks, TJ. Thanks, Benedict. Thanks, Bruce. Thanks, John. Thanks, Bourbon. Thank you, guys. We did well today. Oh, except for this computer so laggy. Play reboot will take care of it. They want me to update my Windows, and I don't want to. I hate it. 52 likes in a day. Well done, guys. Thanks, Christine. Thanks, Hugh. $0 a share, just average down. Thanks, guys. We'll see you on Discord. Sub up, like up, comment down. Happy money sticks around. Jay. See you on the Discordian or on Twitter. Who knows? All right. Peace out, guys.